You want to be successful, but you don't know where to start. It can be tough to figure out how to invest your money and make it grow. Set yourself up for success and discover that wealth and prosperity are within your grasp. Hello, this is Greg Marty, and you are listening to Millionaire Mindset Mastery and Investing for Beginners 2024. Set yourself up for success by building, maintaining, and sustaining wealth through real estate, the stock market, crypto, and more. Provided to you by United Audiobooks. I hope you enjoy my audiobook. Now, let us begin. Introduction. Investing can be overwhelming for beginners because it is a really wide field. There are different types of investments to make and a lot to learn. Even seasoned investors are continually honing their skills to stay on top of the market. But not to worry. That's because this book will teach you what you need to know as a beginner. One of the biggest shortcomings of our educational system is the lack of financial education. Most people go through high school and even college without learning a thing about finances or investments. And they end up being workers who live from paycheck to paycheck. They never attain financial freedom. In the world today, only a tiny percentage of people will attain financial freedom without investing. And these are mostly people who inherited a lump sum of money. For the average person, if they're ever going to be financially independent, they have to invest their money. You see, if you aim to retire early or be financially independent, you have to work round the clock to make money. But that is physically impossible. And that is where investing comes in. Investing is simply making your money work for you. Your money doesn't need to rest. And it doesn't go on leave or vacation. It just works. And oftentimes, it earns more than you do in your everyday job. So, I'm sure that by now, we have established the fact that investing is the path to financial freedom. The next thing is getting the knowledge to make profitable investments. And the first step to doing that is to know the investment options you have. That is what this book aims to teach you. In this book, we are going to look at the terminologies you need to know before delving into the world of investments. Then we will go through the different types of investments you can make and an in-depth explanation of each of them. Where possible, we will teach you how to make money from these investments. By the time you are done reading this book, you should know the types of investments you would like to put your money into and what it entails. In the first chapter, we will be doing a brief introduction to investing. Keep reading to take a step closer to your financial goals. Chapter 1. Introduction to Investing. Not many people will stumble into financial freedom. For most people, they have to work, save, and invest. Note that it doesn't stop at just working, because in actual reality, just working and earning a good income doesn't guarantee you financial freedom. You have to make your money work for you by investing. The concept of saving is generally understood. You save money in a savings account, and you earn a return at a fixed rate with a very minimal risk. Investing, on the other hand, requires that you commit your funds with the prospect of achieving your financial goals while taking a higher level of risk. Again, it's all about making your money work for you. Investing, while rewarding, can often be difficult and perplexing. Understanding the basics of effective investing is the cornerstone of reaching your financial goals. Whether you want a new house, money for your children's education, or financial freedom, attaining these objectives should not be a matter of chance. To make sure that you hit your goals, it takes dedication, investigation, and patience. And, as with other things, you should prepare ahead of time. Before we get started on the different investment options, let's go through a few basic terms you need to know before investing. Asset allocation. Any investment that has the potential to generate a profit, such as stock, bond, ETF, mutual fund, real estate, and so on, is considered an asset. The concept of balancing your investments to reduce risk is known as asset allocation. This is accomplished by diversifying your portfolio with various types of assets that optimize profit while minimizing risk. Ask/bid. The price of an asset is sometimes expressed as a bid/ask format. A buyer's bid is the greatest amount he or she is willing to pay for an asset. The ask is the lowest price for an asset that a seller is willing to accept. Exchange. An exchange is a platform where investors can buy and sell stocks, bonds, commodities, and other assets. It's a platform for brokers, both buyers and sellers, to connect with one another. Bear market. The term bear market refers to a market that is dropping or moving lower. This can happen during a recession or a public crisis, and it can endure for weeks or even years. You're referred to as a bear if you believe the market will fall. This term can also be used to describe individual equities that you predict will fall in value, in which case you would be bearish on that stock. Bull market. The term bull market refers to a market that is rising or going higher. You are referred to as a bull if you believe the market will rise. You would be bullish about a stock if you believe it will rise in value. Capital gain/loss. A profit or return on investment is referred to as a capital gain. For instance, if you purchased a stock for $500 and subsequently sold it for $900, you would have made a $400 profit. A capital loss is the same way. If you bought a stock for $500 and sold it for $200, your capital loss is $300. Dividend. A dividend is when a company pays a portion of its earnings to its shareholders. Dividends may be handed out as a one-time payment on a regular basis, e.g., every month, quarter, half year, or not at all, depending on the firm. EBIT/EBITDA. EBIT, earning before interest and taxes, and EBITDA, earning before interest, taxes, depreciation, and amortization are two often used measurements that represent a company's profits, excluding certain costs. The figures are said to represent the firm's core earnings. Index. An index is a metric that evaluates the performance of a group of assets, such as stocks, bonds, and other financial instruments. The NASDAQ 100, NASDAQ Composite, S&P 500, and Dow Jones Industrial Average are some of the most well-known indices. Market capitalization. The market capitalization of a corporation is the total worth of all its outstanding shares. The market cap of a corporation is derived by multiplying its current share price by the number of outstanding shares. Margin. You must pick between a cash and a margin account when opening a brokerage account to invest. The term margin refers to the practice of investing with borrowed funds. The broker will provide the credit, and your entire account will be used as collateral. The expectation is that you will be able to earn a larger return with the borrowed money than the broker's margin loan interest rate, resulting in a personal benefit for the investor. P/E, price to earnings ratio. A P/E ratio is a valuation statistic that determines a company's value in relation to its earnings, usually expressed per share. If a company's stock is trading at $100 per share and earnings are estimated to be $4 per share, the P/E ratio is 25. Shares. often known as stocks or shares of stock, are a piece of a company's equity that can be purchased. The value of a share is determined by how the company's equity was divided into units. The owner of shares is entitled to a portion of the company's profits or gain in stock price. This also applies to a decrease in stock price, as the value of the share will decrease as well. Short selling. Shorting a stock entails borrowing shares of stock and selling them at their current price with the promise of returning the shares to the lender at a later date. The hope is that the stock price will decline, allowing you to repurchase the shares and return them to your lender, profiting on the difference between where you sold and where you acquired them. Instead, you will lose money when you return the shares to the lender if the stock price rises. Volatility. The degree to which the price of a traded item varies or fluctuates over time is known as volatility. Diversity. Diversity is a portfolio feature that guarantees you have a mix of assets in your portfolio. It also entails deciding which sectors, businesses, or geographic places to invest in. Now that you know the fundamental investment terms, here's a list of the types of investments we'll be going through in this book: real estate, stocks, bonds, cryptocurrency, index funds, options trading, commodities. Chapter 2: Real Estate. Real estate investing refers to the acquisition of a property as an investment to create income. Instead of acquiring properties as a primary residence or for personal use, you instead buy them as a source of income. In real estate investing, properties move from being a liability to being an asset. Purchasing and owning real estate can be a highly rewarding and profitable investment. Real estate consists of a variety of properties that can be categorized according to their intended use. Let's look at some of them. Commercial real estate. A complex of properties or office buildings is divided into several tiny pieces. These are rented out or utilized to operate a variety of companies. As a result, they're referred to as commercial real estate. Residential real estate. Residential real estate includes single-family homes, duplexes, triplexes, townhouses, bungalows, and other structures used for residential purposes. It may be a newly built home or one that the owner intends to resell. Industrial real estate. Industrial real estate refers to large-scale properties used to construct factories, manufacturing units, warehouses, distribution centers, and other similar structures. Land. Any undeveloped land that can be used for ranching or farming. Retail space. Individual units or numerous units used as showrooms, restaurants, shopping malls, retail stores, and so on. Fix and flip properties. Fix and flip homes are residential properties that are in a bad state of repair and are available for a low price. These homes, when purchased by buyers who are interested in property renovation and repairs, are modified and sold at a high price. Mixed use. Mixed-use real estate refers to a single, high-end real estate project that consists of the many types of properties stated above. The idea is to ensure diversification and reduce the risk of project failure. Earnings opportunities in real estate. There are a range of ways to earn from real estate investing. It's not just limited to building properties and selling them or renting them out. Here are the ways by which you can make money from real estate investing. Purchase with the intention of holding. This is one of the most classic methods of real estate income generation. It is a long-term investment strategy in which an investor purchases a property and holds it for an extended period of time. The investor will end up selling the property, but while waiting for the value to appreciate, They will rent it out and sort out real estate finance with the income the property generates. This investment strategy is one of the most popular because it promises long-term gains and provides short-term cash flow. The revenue obtained from renting out the property is used to sort out the mortgage, and it serves as a source of income to the investor. And eventually, when the value of the property increases, the investor sells it off and makes a profit. Converting your home to a rental. If you plan to relocate from your current home, you should consider turning it into a rental property. It's an easy approach to acquire and own other properties. You can repeat this process as you move out of homes you own over time. There are a number of advantages to doing this. First, you save time and money looking for a separate rental property, not to mention the transaction cost. Second, since you lived in the house, you know the property and have probably taken good care of it and maybe even made some improvements. Because of this, you are in the best position to tell what the target market is. When it comes to moving to a new home, some people make the regrettable error of clinging on to their previous one for the wrong reasons. For example, holding on to your home because of a down market. Of course, nobody wants to lose money on their home and have to sell it for less than they paid for it. So, most times, homeowners decide to hold on to their properties until the market recovers. Instead of doing this, it is financially wise to convert it to a rental property until you are ready to sell it off. However, converting your home into a short-term rental might be a bad choice if you can't handle the responsibility of being a landlord. Because when you convert your property into a rental, you push yourself into the landlord business. And this can entail challenges, both legally and personally, when you deal with the tenants. Buying undeveloped land. Purchasing undeveloped land may appeal to prospective real estate investors who are tired of dealing with renters and building maintenance. If you buy land in a region where demand is predicted to grow in the coming years, you should be able to get a good return on your investment. The secret is to do so before everyone notices that new development is heading your way. Flipping. House flipping in real estate involves purchasing rundown properties, renovating them, and then reselling them for a profit. These properties are usually found through foreclosures, property auctions, or bank short sales. To start flipping houses, you must be able to spend your money properly and invest in undervalued properties. After that, you'll need to invest in renovations that will boost the property's resale value and appeal to a potential buyer. You'll also need to list and market the property after the renovations are finished. House flipping is a viable business option if you go into it with the right strategy and have carefully considered the financial aspects. It is advisable to go into it with a team of specialists. Work with a qualified real estate agent who can provide you with the information about the local market and assist you in understanding the types of homes that buyers are looking for. A skilled general contractor can also assist you in determining the existing state of a home. This will help you in avoiding a money pit investment. That said, flipping can be a really profitable real estate venture if done well. Vacation rentals and Airbnb. In recent years, the need for home-away-from-home rentals has exploded, as many vacationers prefer this alternative to booking a hotel. Homeowners can make money by renting out a room or even a complete house for a short period of time, particularly if the home is in a popular tourist region. However, don't forget that short-term rentals are regulated, if not outright prohibited, in some cities. Before listing a house on a service like Airbnb, check your city's regulations. If you're planning to buy a vacation rental property, here are the steps to take before making the purchase. Carry out some research. A property's location is the first and most important thing to consider because it is a factor that cannot be changed. So, The first thing to do is to select not only a city, but also a region that will be favorable. Pay specific attention to weather, proximity to certain amenities, demand, and a variety of other criteria. It is also important that the rental property should be in a nice, accessible, and appealing location in order to attract guests. Perform a thorough market analysis. Once you've narrowed down your choice of location, it is important to dig deeper into the market and the level of demand. Keep in mind that demand for vacation rentals differs from demand for residential rentals. Consider whether you would want to vacation in this location yourself. Consider practical factors, such as what types of attractions are nearby and how their popularity peaks and ebbs throughout the year. Then examine whether there is sufficient constant demand for the vacation rental venture to be considered long-term. Examining the vacation patterns and types of property that are influencing a certain location should be treated seriously. Estimate your future income and expenses. While rental revenue will undoubtedly vary depending on the place you purchase, you should consider charging a weekly rental rate that is about 20% greater than your monthly mortgage payments. While you might expect high demand during peak seasons, the demand must be profitable enough to compensate for slower months. Furthermore, you must account for various extra costs, such as condo fees, HOA fees, routine maintenance, and so on. At this point, you should have a decent estimate of how much rental income the property will provide and how much it will cost you. Promote your property to start marketing your vacation home and filling your calendar with as many bookings as possible once you've made your investment. Fortunately, there are a number of low-cost booking platforms like Airbnb that allow vacation rental owners to market their rental properties. Alternatives ways to invest in real estate. Within the real estate sector, there are investment options such as real estate investment trust, REITs, mortgage-backed securities, MBSs, mortgage investment corporations, MICs, and real estate investment groups, REIGs. They are commonly thought of as vehicles for generating real estate income, but they have different entry and exit procedures. REITs. A REIT is a company that owns many commercial buildings and sells shares to investors, generally to fund the purchase of further properties, and then distributes the rental revenue. MBSs, MICs, and REIGs are all types of MBSs. They're a step further removed because they invest in private mortgages rather than the underlying homes. MICs differ from MBSs in that they hold whole mortgages and pass on interest from payments to investors instead of securitizing sections of principal and/or interest. Nonetheless, both are debt investments rather than real estate transactions. REIGs are often private investments with their own unique framework, offering equity, investments, or partnership services to investors. Real estate investment has its advantages and drawbacks. Some of the drawbacks include high maintenance and management, high transaction cost, and no fixed maturity. It is also less liquid in nature, and it can create financial and legal liability. The main advantage is that relative to some other investment types, real estate is low risk and has potentially high returns. There are several legitimate real estate investment options available. It is your duty to do your due diligence on whichever option you want to pick. See if the drawbacks are things you can manage, crunch up your numbers, and invest.
I hope you are enjoying my audiobook so far. It would be a pleasure if you could let me know how you are feeling about this audiobook in the comments section below. We would greatly appreciate it if you could also like this video and subscribe to United Audiobooks to have access to more best-selling audiobooks in the future. Also, please, if you are interested in getting more free audiobooks, please click the first link in the description below. Now, let us carry on with the next chapter.
Chapter 3: Cryptocurrency. Cryptocurrency is a relatively new type of investment, but it has potentially higher gains than most other investment types if done right. Cryptocurrency first gained a lot of attention in 2017 when Bitcoin had a price increase of over 1,000%. A lot of investors decided to put their money into it at this point because of the price hike. But due to the volatility of cryptocurrency, at the beginning of 2018, the price came crashing down and a lot of those who bought in late were left at a loss. Because of this, most people labeled the industry a scam. However, the industry has kept on evolving since then and now has more stability and support from major financial institutions. More people are on board with cryptocurrency, and it is now an acceptable mode of payment in some places. So, as of now, the industry appears to be flourishing. Before you delve into the world of cryptocurrency, you need to know how you can earn and make profits from it. There are several ways to earn from cryptocurrency. You just need to get familiar with them and pick which one matches your financial capabilities, lifestyle, and risk tolerance. You can earn from cryptocurrency through the following means: participating in ICO, long-term investing, trading, mining, reselling cryptocurrency. Let's take an in-depth look at each one of these. Participating in ICO. ICO is short for Initial Coin Offering. It is similar to the initial public offering for stocks. The main aim is to raise money to fund a project. The founders of this project crowdfund through already established cryptocurrencies for a new cryptocurrency that is linked to their project. So, here's how it works. Let's say you have an idea for a project like an app where content writers can upload their work and get paid for it, and you create a native token for this app. You can run an ICO for this token to raise money to fund the project itself. Investors buy your token with an already established cryptocurrency like Ethereum at a set price. How do you make money from this? If the project is a success and the token gets used a lot, there will be an increase in price. Some coins can go as high as 10 times the ICO price. That being said, there is no guarantee of this. Unless you are very confident in the project, their business model, and the management, ICOs are pretty much a gamble. Also, ICO scams are very easy to pull. So, there are a lot of scams out there. But if you do your assignment and research well on the projects, you can avoid scams and even find a gem. If you do decide to take the risk and invest in ICOs, here are the steps to follow. Pick and analyze an ICO listing. The first step to finding a profitable ICO to invest in is analyzing an ICO listing to find one that might be profitable. You can do this by using your regular search engine and looking up keywords like upcoming ICO listing, or you can use the websites below: www.coinschedule.com, www.icomarketdata.com, www.icomarks.com, https://icobench.com, https://icoindex.com. After picking an ICO listing, you have to go through the list to find one that is promising. This process can be lengthy because there are hundreds of ICOs being listed every month. Check out the project's website. After you've found a couple of projects you think might be nice, the next thing to do is check their website. If the project does not have a website, there is no need for further research. Cross it off your list. If the project has a website, go through it to make sure it is professional, with no grammatical errors. If this checks out, move to the next step. Read the white paper. A white paper is a document that contains everything you need to know about the project as an investor. It's kind of like a business proposal. It contains information like the technology behind the project, their roadmap, the tokenomics, the team, and their partners. Most times, you can find the white paper on the project's website or even the listing website. Appraise the team. On the white paper, you will find the profile of the team. You might even find links to their social media profiles. The team is crucial to the success of the project, and it is important that they have some sort of experience. This is a project you'll be putting your money in. You want to make sure that it's backed by a team of competent people. Although, sometimes, great ideas come from people with little experience. You should always evaluate the personality of the person in charge of this project, too. So, even if he seems like he doesn't have much on the resume side, he has to have the personality and a team of skillful people working on the project. Analyze the roadmap. Usually, you will find the roadmap on the project's white paper and website. The roadmap helps you see what the project aims to achieve, what they have achieved, and the timeline. It also helps you know if the project has delivered on what they promised so far. It is a great metric to see if the project team is really serious and if the project is likely to be a success. Investors and venture capitalists. If you're going to put your money into a project, it is important to know which established investors or organization the team has partnered with. This is because it gives you the assurance that the project is worth something. For example, if the project you are considering has a partnership with Microsoft, you know there is a very high chance of success because Microsoft wouldn't just partner with any project unless it was confident it had something to offer. In addition to this, their partnerships have had a lot of influence on how the project's token will be accepted and used by people. You can find a list of partnerships in their white paper or on their website. Post-ICO plans. After you concluded that a token is worth your money, you need to find out what plans they have to drive the price of the token after the ICO. Since the reason why you invested is for profit, you need to be sure that the team has a solid plan after the ICO. After making your investment, you have to monitor the price until it rises to a point where you feel comfortable taking your profit. It might take a while for the price to rise. It might even dip upon being listed on an exchange. But if you've done your assignment well, you can rest assured that the token will appreciate in value. Long-term investing. A lot of cryptocurrency projects are created with really ambitious goals that cannot be achieved within a short period of time. Their roadmap spans a couple of years. While the success of projects is not guaranteed, if the project keeps hitting its goals and is eventually successful, early investors can make a whole lot from their investment. This is why people invest in cryptocurrencies for the long term. One thing to note is that the cryptocurrency market is extremely volatile. It can make millionaires, but has also been known to bankrupt investors. And frankly, there is no risk-free investment strategy. So, you have to assess your risk tolerance and invest only what you can afford to lose. What is the best way to determine whether a cryptocurrency is worth investing in? Anything worth investing in demands investigation. To estimate the value and risk of a long-term investment, investors use 3 essential methodologies: fundamental analysis, technical analysis, and quantitative analysis. Fundamental analysis evaluates a token's or project's underlying value in the context of the current market and its prospects. Fundamental analysis is basically everything we touched under ICOs. Technical analysis is usually used for short-term projections, but it can be used to analyze how a token reacts to external events. Quantitative analysis helps investors predict how a token is likely going to perform based on past data. For long-term investments, many clients prefer the leading cryptocurrencies by market capitalization, such as BTC, XRP, ETH, etc. This is basically investing based on an idea of what the community values the most, and it's a terrific way to get started with long-term investments. Some new projects may quickly rise to the top of the rankings, and market analysis can assist in establishing what is worthless and what is worthwhile. It's tempting to put large sums of money into high-risk ventures, but long-term investors may suffer as a result. The consistency of an asset's growth throughout time determines its worth. It's a fast-paced industry, but keeping up can be advantageous. Staking and lending. Staking. Before we get into staking, let's take a look at the problem that staking is attempting to solve. Bitcoin and other decentralized cryptocurrencies promise to allow people to send money digitally without the need for a central authority. Mining was once the only way to manage a blockchain, which is a fancy word for a ledger of balances that isn't owned by any single institution. Mining is a competition in which powerful computers attempt to predict the answer to a mathematical problem. Whoever arrives at the solution first gets to put the next page of transactions into the ledger, commonly known as a block. The more powerful your computer is, the more guesses it can make in a second, boosting your chances of winning this competition. It is exceedingly unlikely that any single person or organization will establish a monopoly over updating the ledger due to the principles of probability. That is how decentralization is preserved. The technical word for mining is proof of work because getting the correct answer demonstrates that miners put a lot of effort as there was no other way to arrive at the solution. While the proof of work mechanism is a stable and secure way to manage a decentralized ledger, it is also extremely resource expensive. Running all these supercomputers merely to estimate a number consumes a lot of electricity. Other alternative consensus processes have been proposed over the years as a result of these drawbacks, and one of them is proof of stake. In proof of stake, people will stake actual cryptocurrencies instead of committing electricity to run computers and try to win a contest. But how will it all come together? So, you have a regular computer that's connected to the internet. In technical terms, your computer is referred to as a node, and your locked funds are referred to as your stake. Once your stake is set, you compete to see which node will be chosen to forge the next block. The winner of this challenge is determined by a number of factors, including the amount of money staked, the length of time the coins have been staked, and randomization to ensure that no single entity gains a monopoly on forging. The winner of the competition gets to forge the next block of transactions and is compensated in cryptocurrency for his contribution to the network. Several coins, such as Cardano, use proof of stake, and each coin has its own set of rules for calculating and distributing rewards. So, does this mean staking is only for those who want to forge the next block of transactions in a blockchain? No. You can stake just as a means of passive income. Many proofs of stake-based cryptocurrencies allow you to stake and earn interest without having to participate in the block validation process. In exchange for staking assets, you get a reasonable stream of passive income that varies based on the ecosystem. Because crypto is permissionless, while other project developers may impose restrictions on the usage of their staking services, any coin holder who allows their crypto to be used to serve the protocol can earn interest. Lending. You can earn a passive income by lending out your cryptocurrency. If you have funds to spare, you can put them into lending cryptocurrency to those who want to borrow them for investment. A lot of peer-to-peer lending services allow you to lock up your funds for a period of time, after which you earn interest on your capital. The interest can be fixed by the lending platform or determined by the market. Lending is especially profitable for those that want to grow their portfolio without doing much, as you are guaranteed a return on your investment after the set time. Mining. To understand what mining is, there are a few concepts you first have to be aware of. Let's look at some of them below. Blockchain. Blockchain is a decentralized public ledger that records transactions in chronological order. Any record or transaction that is uploaded to the blockchain cannot be changed or altered, ensuring the transactions are secure. A block is the smallest element of a blockchain and serves as a container for all transaction information. A block has 4 primary properties. Previous hash. This attribute holds the value of the previous block's hash, which is how the blocks are connected. Data. This is the total number of transactions in this block, including those that were mined, validated, and included in the block. Nonce. The nonce is a random value used to alter the output of the hash value in a proof of work consensus method. The nonce is the parameter that is used to generate the hash value that every block is meant to generate. The process of transaction verification in the blockchain is known as proof of work. Hash. The digital signature of the block is the hash value derived by running the previous hash value, the data, and the nonce through the SHA-256 algorithm. The SHA-256 is a cryptographic hash algorithm that generates a unique 256-bit alphanumeric hash value for any given input, which is its distinguishing feature. It will always produce a 256-bit hash, regardless of the input. What is cryptocurrency mining? The process of earning cryptocurrency as a reward for completed effort is referred to as cryptocurrency mining. Let's go into the technical meaning of cryptocurrency mining. Cryptocurrency mining, in a more technical sense, is a transactional process that uses computers and cryptographic methods to solve difficult problems and record data to a blockchain. To unlock a block in the chain, you must first validate it by solving a complex equation, which is commonly expressed as a hash, as mentioned above. A hash is a random combination of characters and numbers that, when combined with the correct key, reveals the original message. It's a fundamental aspect of cryptography and the source of the crypto part of cryptocurrency. Crypto mining is, in some ways, the same as solving these exceedingly difficult mathematical riddles. If you finish it quickly enough, you'll get a coin as a reward. You won't get one if another miner solves it before you do. This procedure is known as proof of work. How to start cryptocurrency mining. If you are thinking about really going into cryptocurrency mining, here are the steps to take. Purchase the correct computer hardware. A typical computer is unable to mine blocks for cryptocurrencies, such as Bitcoin and Ethereum, due to its poor computing capacity. As a result, GPUs and application-specific integrated circuits, ASICs, are the leading cryptocurrency mining technologies. So, the first step is to purchase a computer that has the correct capacity. Set up a cooling system. Because mining technology generates a lot of heat, it's critical to figure out how to keep the system cool. This problem can be solved with the use of electric cooling fans located near the hardware. Set up a wallet. You can register an account with a cryptocurrency exchange like Coinbase to receive the coins you earn from mining. Get mining software. There are different types of software available for mining, and there's a list of mining software given below. Get one and connect it to your hardware. Go for good quality products. Don't be tempted by rogue software that might be found on the internet. Become a member of a mining pool. It is only profitable to mine cryptocurrencies on your own when the currency is brand new. Your odds of mining cryptocurrency decrease as the difficulty level rises. Mining pools are groups of miners who pool their processing resources to mine cryptocurrency quickly. The payments are distributed to the members in accordance with the guidelines. Once you've joined a pool, follow the software's instructions to get started mining right away. Cryptocurrency mining software. Listed here are several versions of mining software that can help you get started on your mining journey. Commercial apps. Cryptocurrency mining. Ethermine. Awesome Miner. Kudo Miner. Nice Hash. Ecos. Minergate. Open source apps. Easy Miner. BFG Miner. Multi-Miner. CG Miner. Cryptocurrency mining is for those with technical skills. So, be sure that you have what it takes before getting involved in it. Otherwise, you would be wasting your resources with very little profit. If you do decide to go into cryptocurrency mining, it is advisable to start with the smaller coins first. Also, ensure that you have the curiosity and a strong will to learn because new technologies are constantly being developed, and the crypto mining space is continuously changing. Trading or reselling cryptocurrency. The last on our list is trading and reselling cryptocurrency to make a profit. As opposed to investing in cryptocurrency for the long term, trading is a short-term strategy. Because of the concept called volatility, the price of assets in the cryptocurrency market can increase and decrease drastically within a short time. To succeed in trading, you need to have the proper skills to analyze market trends. Trading requires technical analysis skills since you'll need to be able to read market charts. In technical analysis, you predict the price movement of your chosen asset based on historical data. Ideally, trading involves buying an asset at a low price and selling at a higher price. This might not give you a lot of profit, depending on what position you take, but in the long run, with consistency, your compounded profit can be a lot. Here are the steps to trading cryptocurrency. Create a cryptocurrency brokerage account. If you don't already have one, you will need to open an account with a cryptocurrency brokerage like Coinbase. Pick a brokerage that offers a lot of tokens and has a simple user interface. To create an account, you'll need to provide your personal information. Fund your account. To get started, you need to fund your account on whichever platform you have chosen. Most brokerages offer funding through wire transfer and debit card. Pick an asset to trade. For a lot of traders, they invest their funds in more predictable cryptocurrencies like Bitcoin and Ethereum because the price movement is more predictable than other coins. However, the profit from trading these coins might be smaller compared to smaller altcoins. Some traders invest in smaller altcoins because they offer more upside potential. Even though they are way more risky, they offer potentially high profits, as some of them can rise in price by about 1,000% in months. Choose a trading strategy. This is where your skill is extremely important. For most seasoned traders, they already have trading strategies that work for them. There is a range of trading strategies to pick from, but you have to master these strategies to be able to apply them. Since most readers of this book are beginners, you might want to pick up a cryptocurrency trading course to learn all about trading strategies and technical analysis. The cryptocurrency market is wide, and there are a lot of earning opportunities that investors can take advantage of. You just need to access your risk tolerance level and find which earning method you can make money from. It is also important to have a reasonable amount of knowledge about whatever investment path you decide to take because the cryptocurrency market is volatile, and you can lose your money very fast. Chapter 4. Stocks. What precisely is a stock? In a nutshell, A stock is merely a share of a company's ownership. Assume that each share is a slice of pizza. When we buy stock, the company is giving us equity or ownership shares in a corporation. Take the example of Microsoft. Let's say they have 7.56 billion shares outstanding. So, if you think of a pizza or a pie, imagine a pie divided into 7.56 billion slices, and that's roughly how many shares they have outstanding. Let's say their stock is worth $216.02. Let's define market capitalization at this stage. Market capitalization is simply the shares outstanding multiplied by the share price. Assume, for the sake of illustration, that the pizza comprises 4 slices, or shares. Let's imagine each of these 4 shares is valued at $1,000. So, if each share is worth $1,000 and you own 4 shares of this corporation, their market capitalization is $4,000. Now that we know what market capitalization is, all we have to do is multiply 7.56 billion by the current share price of Microsoft, which is $216.02. This gives you a market capitalization of $1.633 trillion. This is significant since companies are often valued based on their market capitalization. Because share prices and outstanding shares might fluctuate over time, it's crucial to understand how market cap varies over time. Why do businesses issue shares? This is merely a means for them to raise funds for their company. Consider it this way. They're selling shares of their company to raise money from the general public in an initial public offering, IPO. That's essentially crowdfunding for their company. This money could be used to fund a new product line, for research and development, or to invest in the company's growth. Types of stocks. There are several types of stocks. Let's have a look at some of them below. Preferred stock versus common stock. With preferred stock, you don't have any voting rights. With common stock, you do, but in the event of a liquidation, you'll be the last to be paid. So, what happens if a corporation goes bankrupt and they have to sell all they own? You might not be compensated. That's the harsh reality of being a common shareholder. You're also the last to receive a dividend payment. When you're thinking about buying a stock, or if you're a total rookie who's just starting off, you're usually buying common shares. Large cap, mid cap, and small cap stocks. Large cap, mid cap, and small cap stocks are based on the market capitalization of the company. As a result, large cap corporations often have a market capitalization of $10 billion or more. Due to their large size, these businesses often have a difficult time achieving huge growth. Consider a large, well-established corporation like Pfizer or those that have been around for a long time. They've pretty well hit their apex and are now a massive, large-cap corporation. They have a long track record of paying dividends and routinely offer them. This is because they want to return the dividend to their shareholders as a way of saying thank you for investing in the company. Then there are mid-cap stocks, which have a market capitalization of $2 to $10 billion. They aren't quite large cap, and they aren't quite there yet, but they have a longer track record than small cap stocks. Finally, we have small cap stocks, which have a market cap of $300 million to $2 billion. These are usually smaller businesses that are looking to expand quickly. They are frequently riskier and don't pay out dividends. This is due to the fact that they are still in the early stages of their business. They may have a track record up until the IPO, but it is possible that they will fail. Growth stocks, income stocks, and value stocks. Growth companies have a lot of upside potential. Amazon and Facebook are examples of corporations that are outperforming the market. They usually pay out little or no dividends. They continue to grow, though because they spend their retained revenues in areas such as research and development, seeking to improve their product or service line, or advertising and marketing. Then there are the income stocks. These are stocks that provide a regular dividend or an income payout on a regular basis. Consider Walmart, Verizon, and utility firms as examples. These are companies that have been around for a long time and have the financial ability to pay a dividend on their balance sheet. As a result, they usually have a proven track record or business plan, as well as steady dividend increases throughout time. Finally, there are value stocks. Value stocks are usually trading at a discount to their fundamentals. In the marketplace, these are regarded as unfavorable. That's why they're undervalued. But these stocks have the potential of booming if the company ends up doing well. Risk. So now that we know how stocks are classified, we need to know about risk. Investing is all about taking risks. As investors, we are compensated based on the level of risk we take. So, what exactly is risk in this context? The possibility that your actual outcome will differ from what you expected is known as risk. So, if I'm a new investor who wants to start investing in stocks and I think Tesla will go up $30,000 per share, but it doesn't, that is the danger I am taking by putting myself in that situation. As a result, risk includes the possibility of losing part or all of your investment. There are different types of risk, but we'll focus on 7 of them. Market risk. The first is market risk. This is essentially a risk from the entire market. As a result, if you track economic trends or other events over time, you'll see that just by being in the market, your portfolio may be in danger. If you recall, there was a play out of market risk in 2008 that wiped out practically everyone's portfolio in almost every product category. Liquidity risk. This is the possibility that I won't be able to sell this investment. It isn't a liquid. Concentration risk. This happens when you have too many eggs in one basket, i.e., you have far too many comparable equities, or you have all your money invested in just one stock. As a result, your capital is so concentrated that it has become a risk. Credit risk. This indicates that the firm can't pay back its debts. Thus, the company you're investing in, for example, can't pay off its debts, forcing them to liquidate assets or go out of business. Inflation risk. The risk of inflation is the loss of buying power. The entire market is prone to inflation. And if there is inflation in the market, your portfolio basically loses value and buying power. Horizon risk. This refers to the length of time you plan to invest. Let's say you were intending on making a 10-year investment, but you got sick and don't have any additional resources. So, after barely a year, you had to sell a portion of your investment to cover your medical expenses. Horizon risk occurs when you estimate it will take 10 years or 1 year for an investment to pay off, and then that estimate changes. Foreign investment risk. This is also true of international investments. So, if I want to invest in a new startup in North Korea, and that venture is shut down by the government for whatever reason, that is the foreign investment risk I'm taking on by investing in that location or country. Steps to investing in stocks. So, how do you go about investing? You have 3 possibilities from which to choose. You can employ a financial advisor or sign up for a robo-advisor. The latter are programs that help you round out your purchases and invest. Or you may decide to use a stockbroker, where you sign up for a trading account. You can pick and select the stocks you want to invest in through the stockbroker of your choice. Here's how to invest in stocks and the fundamentals of how to get started in the stock market, even if you have no prior experience. A 5-step guide to get you started. 1. Decide on your investment strategy. 2. Open an investment account. 3. Make a decision about where to put your money. 4. Determine how much you can invest and then purchase your first stock. 5. Maintain a close check on your portfolio. Let's look at each of these steps in detail. 1. Decide on your investment strategy. Investing provides you with different options. It allows you the liberty of choosing your strategy based on how much knowledge you have, the amount of time you have to devote, and your capital. You can dedicate as much or as little time as you want to investing in stocks. Here's where you'll have to make your first significant decision. Do you want your money to be invested by a professional? This way, you can let someone else handle your portfolio. That can be an ideal approach for folks who only want to bother about investing for a few minutes a year. It's also an excellent option for those of us who have little experience with investing. On the other hand, it inevitably means a certain reliance on someone else to do the work for you, and you may not be comfortable with that. Do you want to be in charge of your own finances? This approach allows you to be fully in charge of your portfolio. You get to make the important decisions and moves. It is an ideal option for those with more experience or who have the time to spend making investment selections. You'll need a brokerage account if you wish to pick your own stocks or funds. Your decision here will influence the type of account you open in the following stage. 2. Open an investment account. So, what type of account would you like to open? Here are 2 deciding factors. If you want a professional to handle your finances, a human financial advisor can assist you in the creation of a stock portfolio as well as other wealth planning activities. With a high investment minimum, a human advisor normally costs roughly 1% of your assets annually. One significant benefit is that a qualified human advisor can assist you in sticking to your financial plan. If you go with a human advisor, you'll have to interview a few people to see who will best suit your goals and keep you on track. A robo-advisor can create a stock portfolio that is tailored to your time frame and risk appetite. They're usually less expensive than hiring a professional human advisor. If you use a robo-advisor or an online brokerage, you may open an account in minutes and begin investing right away. If you want to be in charge of your own finances, you can buy stock and a variety of other products through an online broker, including bonds, exchange-traded funds, ETFs, mutual funds, options, and more. The finest brokers offer no-fee stock commissions, as well as free instruction and research, so you can swiftly improve your game. 3. Make a decision about where to put your money. The next crucial step is to decide what you want to invest in. For many newbies, this stage can be intimidating, but if you've chosen a robo-advisor or a human advisor, it'll be simple. Using a consultant. You won't have to determine what to invest in if you work with a human or robo-advisor. This is part of the value these services provide. When you sign up for a robo-advisor, for example, you'll be asked questions about your risk tolerance and when you'll need your money. The robo-advisor will then put together your portfolio and choose which funds to invest in. Simply deposit funds into the account, and the robo-advisor will construct your portfolio. Making use of a brokerage. If you use a brokerage, you will be responsible for selecting each investment and making trading decisions. You can invest in a variety of assets, including individual stocks and stock funds. The finest brokers provide free research to assist with this process, as well as a wealth of tools for newcomers. You can choose to invest actively or passively if you manage your own portfolio. The main distinction is that you get to choose how long you wish to invest. Active investors trade more frequently, whereas passive investors look in terms of the long run. According to research, passive investors outperform active investors. Whether you use a robo-advisor or a brokerage, you have a few options for investing. 4. Determine how much you can invest and then purchase your first stock. The key to building wealth is to add money to your account gradually and let compounding work its magic. That means you'll need to put money aside for investing in your budget on a monthly or weekly basis. The good news is that getting started is relatively straightforward. What is the appropriate amount of money to invest? Your investment amount is fully determined by your budget and time frame. While you should invest as much as you can comfortably afford, experts advise leaving your money in the market for at least 3 years, ideally 5 or more, to ride out any market swings. If you can't commit to keeping your money invested for at least 3 years without touching it, start an emergency fund. An emergency fund can prevent you from selling an investment too quickly, allowing you to ride out any stock market fluctuations. How much cash will you need to get started? Most major online brokerages have extremely low account minimums, allowing you to get started with a small amount of money. Many brokers sell fractional shares of stocks and exchange traded funds. If you can't afford a full share, you can still buy a fraction of one, so you can start with nearly any amount. With robo-advisors, it's even easier. Few robo-advisors require a minimum account balance, so all you have to do is deposit the funds and the robo-advisor will handle the rest. If you set up an auto deposit to your robo-advisor account, you'll only have to think about investing once a year at tax time. Make a deposit and start investing after you've set up your account. 5. Maintain a close check on your investments. It's time to monitor your portfolio now that you've opened a brokerage or advisor account. This is straightforward if you're working with a human advisor or robo-advisor. Your advisor will handle the heavy lifting for you, maintaining your portfolio over time and ensuring that you stay on target. If you manage your own portfolio, you'll have to make all the decisions. For both novice and seasoned investors, stock decisions can sometimes be difficult to make. If you're a serious investor, you'll need to stay on top of the latest developments so as to make the best decisions. More passive investors, on the other hand, will have fewer options. They usually purchase on a set schedule and are unconcerned about short-term changes because of their long-term outlook. Tips for investing in stocks. So, let's get started with some stock investing advice. Take it slowly. The first thing to do before you start investing is to learn. Spend time studying and listening to podcasts. One thing to keep in mind is that learning about the stock market will take time. Give yourself time and be patient with yourself. Don't just jump in with both feet straight into the water without first learning about the stock market. So, you're learning about the stock market, and you're trying to locate as many materials as possible to go through in order to gain a thorough understanding of the stock market. And at this time, one of the finest methods to practice is to engage in paper trading, which is essentially trading with fictitious money. There are a number of free apps available that allow you to practice trading, play with stocks, and get familiar with the market before investing your hard-earned money. So, if you're not completely comfortable trading with your hard-earned money, I strongly suggest you wait. Look into a paper trading app that simulates the stock market so that you can get comfortable and familiar with it before risking your actual money. If you're actively learning, you may learn a lot in a short amount of time. However, don't let your emotions get the best of you, and don't just jump in because there's no other time to buy stocks. In the stock market, there will always be investment opportunities. Avoid investing your emergency fund savings in the stock market. The stock market has a long history of ups and downs. If you invest your emergency fund in the stock market and there happens to be a bear market, you might lose half of your fund or even more. So, What happens when you need the money for something important? You must always have liquid cash at hand. Investing all of your liquid cash, the money you're keeping for a rainy day, in the stock market is not a good idea. Find a strategy. You need to figure out what kind of method works best for you. The stock market is not an easy business to navigate. Some may even call it an art because each trader will have their own set of ideas and ways for making money. You may ask 15 different financial consultants how they make money on the stock market, and they'll all have different ideas. As a result, try to come up with a method that works for you. You can be an active trader who trades on a daily basis, or you can be a long-term investor who puts money in the stock market and waits for it to grow. Diversify. Diversifying your portfolio is a very common expression you'll hear a lot. But exactly what does that imply? So you'd like to diversify your investments. You want to invest in a variety of stocks, but you don't want them all to be in the same industry, so that they won't all have the same price movements at the same time. If all your stocks are in the same sector, if there is a general bear market in that sector, all your stocks will go down. Having a balanced portfolio in which some of your stocks are up while others are down is a fantastic strategy to be safe. That's an excellent approach to diversify your portfolio by not putting all your eggs in one basket. Invest in what you know. It's a lot easier to put your money in a sector you are knowledgeable in, so you can forecast when the stock will go up or down because you're already invested in that sector or company. You're probably already aware of what's going on with the company's development. Let's say you're a Tesla fan. You may be aware that certain advancements and technological advancements in Tesla are on the horizon. So, you can buy Tesla because you believe that in the next few years, those stocks will be worth a lot more than they are now. It is easier to make more accurate predictions with a company you already keep up with. Like the cryptocurrency market, the stock market also has its own risk. You need to know exactly what you're doing if you want to invest in stocks, especially trading. Chapter 5: Index Funds and Mutual Funds. What is an index fund? An index fund is just a collection of stocks that are designed to represent the stock market as a whole or a certain sector of the stock market, with the most well-known equities representing the relevant geographies. So, instead of investing in a single company, you can put your money into a fund. To make things easier, here's an example. The FTSE 100 is certainly one you've heard of, and it refers to the top 100 companies listed on the London Stock Exchange, with the top 100 meaning the companies with the biggest market capitalization. The S&P 500 are the largest 500 companies by market cap in the United States, not including all those in the FTSE 100. Advantages of index fund. Unlike a mutual fund, a machine manages your funds. As a result, the cost of investing in an index fund are much lower. For example, if you invest in index funds that give you exposure to the S&P 500, which represents the largest 500 companies in the stock market, and a company falls out of the S&P 500, your fees are significantly reduced because your computer automatically kicks that company out of your index fund and replaces it with a new one. Because index funds aren't actively traded throughout the day, you're buying the price of an index fund at the previous day's closing when you buy one. So you don't get to see real-time prices the way you can with mutual funds. But you do get diversification because you're investing in a basket of stocks rather than a single firm. You don't have to handle your money as a passive investor because your investments are managed for you by a computer. Disadvantages of index funds. One of the most significant disadvantages of an index fund is the restriction on how frequently you may purchase and sell it. Second, many index funds have a minimum investment. This means that if you don't have enough money, you might not be able to get into one. How to buy index funds. Index funds can be purchased through your brokerage account or directly from index fund providers like BlackRock or Vanguard. Here are 3 of the top companies to buy the best index funds from. Vanguard Investments, Fidelity Investments, Charles Schwab. What is a mutual fund? A mutual fund is a type of investment vehicle in which a fund manager actively manages the investments. Now you'll have a funds manager who will invest your money in various companies on your behalf. Because you're paying for a funds manager to actively manage your money, mutual funds have higher fees. And this fee must be paid on your assets every year, whether you make or lose money. Advantages of mutual fund. One of the most important advantages of a mutual fund is the ability to diversify your investments. You're not just buying one stock, you're buying a basket of them. The second advantage is that you won't have to perform all of the research yourself to pick the greatest investment, since your money is being invested for you by a funds manager. Disadvantages of mutual fund. However, as mentioned earlier, one of the most significant disadvantages of using a mutual fund is the hefty fees. Since you're paying for a funds manager to look after your money actively, the expense ratio on mutual funds is much greater than on other funds. The second disadvantage is that many funds managers can misuse their management authority by constantly buying and selling stocks, which then results in high taxes and substantial losses. How to buy mutual funds. Direct investment with the fund house. You can invest in mutual fund schemes by going to the fund house's local branch office. You will be required to fill out and submit a form along with the following documents: passport size photograph, proof of address, canceled bank check leaf, proof of identity. Through a broker. You can invest in mutual funds through a broker. He will provide you with all of the information you need to make your investment, including the characteristics of various schemes, the documentation you'll need, and so on. He'll also offer professional advice on what to put your money in. All of these come with a charge that will be deducted from your total investment. Via the official website. Investing in mutual funds through the internet is now available from most fund firms. All you need to do is fill out the required information on the website and submit it. Most investors prefer the online procedure of investing in mutual funds since it is fast and convenient. Using an app. Many fund companies provide users the option of investing via a mobile app that may be downloaded to their device. Investors will be able to use the app to invest in mutual fund schemes, purchase and sell units, view account statements, and look up additional information about their portfolios. Chapter 6. Bonds. What are bonds? Let's begin by defining the subject. Our loans are offered by investors to businesses or the government at a predetermined interest rate for a set length of time. Consider the following scenario. Buttons. A firm wants to open a new environmental department and decides to obtain funds by issuing bonds. Each bond is worth $10,000, and Buttons pledges to repay the amount in 10 years to entice investors. Every year, Sam's commits to pay a 10% annual interest rate, known as the coupon rate. The investor receives $1,000 from Sam's, which represents his profit. Regular interest rates apply throughout the entire 10-year term of the bond. The investor redeems his bond after it has reached maturity, which is 10 years. Buttons then refunds the $10,000 primary investment to the investors. But bonds are not the same as loans. Banks grant loans at a set rate of interest. Security, on the other hand, can range from a mortgage to a life security policy, or even a car. Why then do bonds exist? Because businesses and even governments frequently require large amounts of money to support initiatives and projects. And because this sum typically exceeds what a bank can supply, businesses and governments issue bonds to generate the necessary capital. To put it another way, if you're an investor, it's essentially a large loan that you're giving to companies or governments that are issuing bonds. Let us now examine the distinction between shares and bonds. We often mix up stocks and bonds, although they are two very distinct things. Shares are similar to bonds, except they are not borrowed. Instead, with shares, the buyer gets a portion of the ownership in a corporation, while a bond does not offer ownership to the lender. As a result, when the business is doing well, you do not benefit from its success. You also don't need to be concerned if it's not doing well, as long as it can still return your loan. Can bonds be sold in the same way that stocks can? Yes. A discount bond is one that is offered at a lesser price than its original value. Selling at a premium, on the other hand, occurs when bonds are sold at a greater price than their original value. Advantages and disadvantages of bond investment. First, understand that while bonds are a defensive asset that may provide a consistent income stream while also safeguarding your investment, they aren't risk-free. Let's take a look at some of the advantages of investing in bonds. Bonds are a popular choice for folks who need to live off their investment income. This is because bonds provide the greatest and most consistent revenue flows, even when interest rates are low. Also, compared to stocks, a diversified bond portfolio may deliver reasonable returns with lower volatility. In addition to these, bonds provide legal protection for the investor. When a firm goes bankrupt, investors are frequently concerned about getting their money back. Bond investors, on the other hand, have priority over shareholders in a bankruptcy court when it comes to claims on the company's assets. With that being said, let us now look at the disadvantages of bond investment. The first is that the investment returns are predetermined. When compared to investments in shares, having a set yield is both a benefit and a disadvantage. Compared to stock, it is less liquid. Some bonds, such as those issued by the Treasury and major firms, may be quite liquid. However, bonds issued by a smaller, less financially solid company may be less liquid since fewer individuals are prepared to purchase them. How to buy bonds? You have a few alternatives when it comes to purchasing bonds. Brokers. You'll be purchasing from other investors who are eager to sell their holdings. Here are a few online brokers to help you get started. Charles Schwab, TD Ameritrade, E-Trade, Interactive Brokers, Fidelity. Exchange Traded Fund, ETF. An ETF buys bonds from various corporations. Individual investors might choose a fund from an ETF since it has a diversification advantage and does not require huge purchases. Federal government. Investors can buy bonds directly from the federal government through the Treasury Direct, without having to go through a middleman or broker. That way, you don't have to spend on extra charges. Chapter 7. Options Trading. What is options trading? Trading options is an alternate means for investors to invest in the performance of a security, such as a stock or an exchange-traded fund, ETF. An investor tries to profit from a security's upward rise while merely investing a portion of what it would cost to buy the security outright. Take, for example, a stock that is currently priced at $200. If you bought a share and it increased in value by $10, you would make a 5% profit. With the correct option contract, you can profit from a similar increase in the stock price while only paying a tiny premium that is substantially less than the cost of holding the stock. How does options trading work? When you buy an option contract, you're not buying the security itself, unlike when you buy a stock. Instead, you're buying a contract that provides you the right to acquire a security at a specific price before a specific date. Consider the following scenario. There is an ice cream shop chain called Blue's Ices Ice Cream. The stock of Blue's Ices is now selling at $55 per share, but an investor believes that the stock price of Blue's Ices is going to rise. This investor considers purchasing 100 shares of the stock to take advantage of the predicted price movement. She is apprehensive, though, about the initial money requirement. Let's pretend there's another investor who already owns 100 shares of Blue Ice's stock and intends to keep hold of it for a while. He believes the stock price will not rise significantly in the next few months. A call option, which is a sort of option contract that offers the buyer the right to buy shares of Blue Ices at a predetermined price called the strike price at a set time called expiration, can be used by both investors. In this scenario, it's $55 per share for 4 weeks, and each conventional option contract normally represents 100 shares. As a result, this one contract would entitle the buyer to purchase 100 shares of Blue Ice's stock at a price of $55 a share. The buyer buys the contract by paying the options premium, which is decided by a number of criteria, including the stock price, the period till expiration, and implied volatility. This premium is credited to the call option seller and serves to partially cover the stock's original acquisition price. Let's say the total premium is $1,000 for this example. Our buyer makes the $1,000 payment and buys the contract. Now let's look at what might happen to this investment. Assume our buyer's intuition was correct, and stock in Blue Ices is now selling for $70. First, remember that the call option offers the buyer the opportunity to buy shares of this stock at $55 per share. The buyer might exercise the call and purchase 100 shares for $55 each, then sell them at market value for $70 each, making a profit of $15 per share, not including commission. Because Blue Ice's stock has increased by $15, the buyer's contract is worth approximately $1,500. If our buyer sold her contract, she might potentially make roughly $500 in profit. The contract's worth, minus the $1,000 premium she paid for it at the time of purchase, as well as any commissions and fees. While the buyer's investment paid off, the seller's investment did not. Although he received $1,000 for selling the option, he missed out on a percentage of the stock's appreciation because he was forced to sell his stock at $55 per share. Assuming the stock has moved in the opposite way and is now selling for $45 per share on the last trading day before expiration, the buyer's contract grants her the opportunity to purchase shares of Blue Ices for $55 each. No one wants to spend $55 for a stock that sells for $45. The buyer's contract is about to expire, and she is now on course to lose 100% of her initial $1,000 investment, plus any trading charges and fees paid by the seller. For the seller, he still holds his stock and made $1,000 selling the option. Please keep in mind that this is a simplified example. Because the pricing of options is so complicated, it's crucial to educate yourself regarding them and the dangers involved before you invest. While the price of the underlying security that the contract represents has the greatest impact, other factors such as time decay and implied volatility also have an impact on option prices. The example above, which is the call option, is just one of the ways in which options can be used. There are a variety of other ways. There are put options that can be beneficial to possess if a stock's price falls. Calls and puts can be combined in a number of ways by purchasing and selling these options. When the market swings in any direction, investors have the opportunity to profit, and they can devise methods with varying levels of risk. How to start options trading. There are a lot of options trading platforms out there, but here are a few to help you get started. Tastyworks, E-Trade, Webull, Merrill Edge, TD Ameritrade, Interactive Brokers. Create an account on any of these platforms and you can start trading. Although it's probably best to start with a trading simulator first, so you can get accustomed to trading before delving into the real thing. Chapter 8: Tips for Investing. The number one investment that you can make is in yourself. According to Warren Buffett, investing in yourself is your most important investment and should be your first step. And by yourself, I mean investing in your knowledge, developing your skills, your confidence, your beliefs, learning about finances, learning about business, and acquiring the different skills that can add value to you. And the truth is that if you can invest in yourself, that's what's going to bring you the highest return out of anything else. By investing in yourself, you're going to be able to learn the skills and habits that can help you make more money and better decisions in your life. Pay yourself first. Now, the first and most important thing is to pay yourself first. You need money that you can put aside to save or invest. And if you can't take a percentage of what you make and put that aside, then there's no hope for you to be able to grow your network and be in a position to make more money. And so, whatever amount of money that you're making right now, you have to make a decision, which is that you're going to take a percentage of what you make, and you're going to put it in a savings account or an investment account. As a rule of thumb, you should aim at saving about 10% of your income for investments. If you feel like you can't afford to save any money because you're living paycheck to paycheck, maybe it's time to create a budget and stick to it. Have an emergency fund. Another thing you should do is make sure you have an emergency savings account. This is critical. If you don't have it, you might end up in serious trouble. Typically, you should have at least 3 to 6 months of savings, depending on your expenses. So, if your monthly expenses are $2,000, you'll need to set away at least $6,000 to $12,000 in case of an emergency. If anything happens to your job or business, you should be able to fend for yourself and your family for at least 3 months. Learn the game first. A lot of people make the grievous mistake of going into investments without properly learning about it. This is the fastest way to lose your money. If you want to go into investment types that require a lot of technical know-how, then you must invest money and time to learn properly. Say, for example, you want to invest in cryptocurrency, but you don't even understand how the market works. Your money might end up vanishing into thin air. So, one of the first things to do before putting your money into any investment scheme is to take your time to gain knowledge about it. Take courses, read books, join communities, and even acquire a mentor. Have a steady source of income. You can't invest from nothing. You need to have a source of income before you even consider investing. The progression should be earn, save, invest. You can't save if you don't have a source of income. And if that's the case, you shouldn't even be thinking of investing. Even if you get a lump sum and you decide to invest it thinking you'll live off the revenue from your investment, most times, it might take a while before you start getting a steady income from your investments. How, then? Do you survive in the meantime? Put your money into something you understand. Don't put your money into something when you have absolutely no idea how it works. I know this one appears to be self-evident, and you would think that everyone would comprehend it. But no, it's not common sense because it's still done all the time. People invest in something because someone told them it was a good idea, or they read an article that indicated it was going to be successful. I'm not implying that you must be a full-fledged authority in the industry, but at least you need to have some idea of how things work. What has been the past performance of that particular investment? What is the commission rate on that investment at your brokerage? How do they generate money, as well as the level of volatility you might expect? It's as straightforward as that. If you can't answer those questions and explain why your money is best suited for the investment, then don't make it. But here's the thing. Figuring out where your money is invested isn't all that tough. And, for the most part, a fast YouTube or Google search will tell you pretty much all you need to know. Spending an hour researching whether or not it is the best option for you is always worthwhile. Just 1 hour of your time can help you better manage your expectations and save you thousands, tens of thousands, or even hundreds of thousands of dollars. Investment always comes with risks. The third point to consider is that when it comes to investing, individuals often overlook the fact that everything you do involves some level of risk. There isn't a single investment that doesn't come with some level of risk or the possibility of you losing money. Even if it's only a fraction of a percent of the time. We may take the example of the S&P 500, which never has delivered a negative outcome in a 20-year holding period. And, while it's extremely probable that this will be the case in the future, it's not a given that it will. Even during a typical holding period, there will be some volatility along the way, and there may be times when you may not make any money at all. You can go another few months and then suddenly be negative, or you can go another few months and suddenly be positive. That's because even the safest investments are still a risk. So, don't expect anything to be certain, and always assume that whatever you undertake will include some level of hazard. And it's entirely up to you to feel at ease with this and to comprehend it. The more you prepare yourself so that your expectations are aligned with the realities of investing, and the more you understand this, the better you'll be as an investor and in risk management. When investing, think long-term. When it comes to investing, it's now more crucial than ever to consider the long term. The fact is that we have far less assurance about what will happen in the short-term future. Prices may fall, markets may behave erratically, and you may lose money as a result. However, generally speaking, the longer you invest, the less your odds of losing money are. This is due to the fact that the longer you invest, the higher your chances of surviving any downturns or price decreases and finally recovering. However, there are also other reasons why long-term investment is typically the best decision. The first is that it removes the emotional component of investment. For example, when you invest with the intention of retaining it for 10 or 20 years, you become less worried about day-to-day price variations than if you were only expecting to retain it for a few days, weeks, or months. Second, it's just so simple. It requires no thinking or effort on your part to simply not do anything. It's as simple as purchasing it once and then leaving it alone for decades. In addition to these factors, long-term investment provides several tax advantages that might save you a significant amount of money. Consider that long-term capital gains on assets held for more than a year are taxed at a lower rate than short-term capital gains on investments held for less than a year, which are taxed as regular income. All of the evidence suggests that for the vast majority of investors, long-term investment is the best option. Make a habit out of investing. The fifth point is that when it comes to investing, It's critical that you make it a constant habit. Investing isn't something you should dabble in here and there, or regard as a side interest. You must invest regularly and on autopilot over time. That doesn't mean you should be actively involved every single day, 24 hours a day, or that you must stay up late at night reading stocks and investing in such. But it does mean that you should be vigilant about putting a regular amount of money into your assets every month, regardless of what occurs. Unless you invest regularly, you're unlikely to see strong, long-term benefits. Just make it a point to make this a part of who you are and what you do. Again, you don't need to spend a lot of time on this, but you do need to put things up to run on autopilot, where you contribute a regular amount of money over time. Keep emotions out of investing. Don't get too worked up over your investments. In other words, don't take it personally. Getting overly emotional about your investments is likely going to overrule all of the facts, logic, and reason when it comes to investing, and you're more likely to make mistakes. When it comes to investing, emotions such as fear of missing out, fear of losing money, or fear of essentially anything are useless. And if you find yourself becoming emotional about your investments, it's either because you invested more money than you were comfortable with, or you didn't do enough study to truly understand what you were investing in. And it's obvious that when it comes to investing, the more rational the method you adopt, the more money you'll make. Diversify. I know you've heard this a lot. That's because it is important and it works. Invest in different things so that no matter the market condition, some of your investments will still rake in profits. Imagine only having cryptocurrency in your portfolio. If the cryptocurrency market is bearish, then your portfolio will nosedive. But if you have stocks, cryptocurrency, and index funds, there is a very low chance that they will all experience a bearish market at the same time. And this is why diversification is important in investing. Be wary of scammers and fads. It's thrilling to invest for the first time, but don't get caught up in the hype and end up falling for scammers. No investment is without danger. If you see an advertisement that claims an investment will guarantee big returns, avoid it. With the rise of social media, it has become very easy to scam people of their money. On nearly all social media platforms, you'll find scammers waiting to prey on unsuspecting victims. Usually, you get direct messages asking you to invest a certain amount and receive interest in a ridiculously short period of time. Some of these scammers ask you to give them your money to trade for you, assuring you that it is risk-free when, in actual reality, no investment can genuinely make that claim. As a general rule, if something appears to be too good to be true, it most likely is. No investment scheme will double your capital in 5 hours. There is no fast road to success in investing. It takes time and dedication. Final words. Now that you're aware of the different investment options you have and how to go about them, it is time to pick whichever one suits you. Double down and learn about it thoroughly, especially if you're going into investments like options trading. Basically, investments that require a level of technical know-how that wasn't covered in this book. Can you become a successful investor? Absolutely. You just need to put in the time and effort to learn what works and then diligently apply the knowledge you've gained. And once again, remember that you cannot work your way into financial freedom. You have to let your money work for you by investing. And when investing, be patient and don't fret. If you've done your assignment on your investment, no matter what the market does, do not panic and trust that you made the right decision. The only exception would be if you didn't do your due diligence on your investment. Finally, it's all about compounding your investment. You probably won't get rich by making a one-off investment. You have to consistently invest your money over time and let compounding work its magic. Before you put this book down, I have a question to ask you. Did this book teach you anything about investing? Or did you learn anything new from this book? If you answered yes to any of these questions, then I have a proposition to make. But before I make my proposition, remember that knowledge sharing is essential to economic survival. It won't do anybody any good to hoard good knowledge. So, here's what I need you to do if you found this book useful in any way. Leave an honest review. I need to reach more people with the information packed in this book, so they, too, can move one step closer to attaining financial wisdom. It will cost you no money and less than a minute to leave an honest review, but you might just be changing someone's life for the better. Here's what your honest review will do. It will make someone's search for good resources a little easier. It will help one more person attain financial freedom. It will prevent someone from losing money in investments. It will change someone's life. So, kindly take a few seconds to write an honest review of this book. You can even take it a step further by sharing it with someone you care about. Thank you. Introduction. We have all wanted to find our own slice of independence. Becoming independent in terms of wealth takes dedication and willpower, but it is absolutely possible for anyone to achieve success. Wealth can often be something that eludes us, and at times this is due to circumstances we feel we cannot avoid. The truth is, however, that you can learn to rise above your current circumstances and channel your creativity into a lasting and dependable source of income. In this book, you'll learn how to develop the mindset of a millionaire. With persistent action and a clear vision of what you want from your life, you can begin to see the world through the eyes of a millionaire. And we won't just stop there. You'll see how to invest what you already have as you learn skills that will help you create new and interesting sources of income, all while improving your quality of life and giving you more time and freedom to do the things you've always dreamed of. There are many ways that we can capitalize on our skills and passions and turn them into real wealth. This creativity is what gives us a higher self-worth, pushing us to achieve more than we ever thought possible. From here, you'll discover how to take those enthusiasms and market them in your favor, maximizing your potential at every turn. By the end of this book, you'll have a greater understanding of how you can use what you already know as well as what you are passionate about to grow your wealth and become the best version of yourself. Having a millionaire mindset will also allow you to help others on their journey in life, thus giving you more than physical rewards. The benefits are truly endless when you discover your potential for a wealthy and successful life with the mindset of a millionaire. Chapter 1. There is power to your imagination. Our imaginations truly are amazing things. With our imagination, we can conceive any idea and begin the process of making it a reality. These ideas can change the world and bring better things for people who have struggled or who have fought hard to live the life of their dreams. We have all struggled at some point in our lives, and we've wanted a way to climb out of our hardships and become successful so that we never have to worry or feel like we are not in control again. Being an imaginative person is your first step in thinking like a millionaire. Everywhere you look, there are things in the world that need improvement because whatever is currently in play is not working. Also, there are things in the world that are broken or need to be reformed. And you can fix this with your imagination. You can see that something must change to improve the quality of life and create a better world for everyone. Some of our greatest thinkers have done this for humanity. Not only have they helped to bring about positive change because they dreamed it possible, but they also saw areas in our world that we're lacking. Maybe we were lacking a certain item or service. But whatever the case, these innovative thinkers gave the world something it desperately needed. The information age in which we currently live has seen countless imaginative and innovative thinkers bring about global change. These people saw the world for what it could be, not for what it was. People like Bill Gates and Mark Zuckerberg had the imagination to see a more connected world where we could communicate with people across the globe in a matter of seconds. Just imagine that. Talking to relatives you haven't seen your whole life. Reuniting with old friends from college. The possibilities were truly endless, and they were made possible by people who had the imagination to seek out a better world. What have you imagined for your world? In what ways can you bring about change that could help people and improve our overall quality of life? This is where your imagination has the most power. You might be thinking of an innovative product that could revolutionize the way we do our morning routines. This product might have the potential to become vital in a person's life, as it would save them time and allow them to stay focused on what matters most to them. How great would it make you feel if you knew thousands, potentially millions, of people across the globe were using something that you created to better their lives? Now imagine how this innovative idea could change your life. The great imaginative thinkers who have succeeded in changing our world for the better all have one thing in common. They've made enormous fortunes from their imaginations. Your ideas don't have to be so big that they change the world for you to find financial freedom and become a millionaire. But you do have to use your imagination to change your world. This is the basis for who we are as humans. It is what sets us apart from animals. We think about the what-ifs as we go through our day, imagining life in another way. We think about what could happen if we had just done this differently, or done that instead. We also look at things in our work and our hobbies and think, wouldn't it be better if? This is where we take those imaginative ideas and we push forward to achieve the life we've always dreamed of. Again, don't feel that you have to be the next Bill Gates to become a millionaire. You just have to follow through on your imagination and achieve the success you know is possible. Be the pioneer. Look around at your environment and at the people you regularly associate with, and think about how things could be better. Something can always be done differently to help someone gain better control over their lives or to find purpose in what they do. These changes will give you and those around you a higher quality of life, which is worth paying for. People spend countless dollars trying to make their lives easier and better, and most of the time, they don't hesitate in that purchase. We all want convenience and comfort, and it can come in many forms. How do we create this better world, even in a small way, just by our imaginations? How can we learn to take our innovative ideas and bring them into the physical world where we live so that we can make a real change? The easiest way to do this is to start with a list of things you see that do not benefit the people you care about or that fail in one way or another. These methods or systems that you regularly engage in and know do not help your world must be changed. As you look at these items in your list, what can your imagination come up with as a solution for each one? How can you change things for the better? Or what would you do if resources were endless? These solutions come from what your imagination can create, and you have to let your mind expand and flourish to see the world in a new and better way. Fortune favors the bold. People who have vast amounts of wealth can take their imaginative ideas and put them to real use with a snap of their fingers. They can hire the right people to put their plans into action, and they have the resources and necessary tools to create the products or services the world desperately needs. While most people don't have these luxuries, stifling your imagination simply because you cannot afford it will never help you become a millionaire. If you want to become wealthy and financially independent, you have to start thinking that way right now. We all have our limitations, even millionaires. But the minute you tell yourself that you cannot do something is the minute you have lost your battle against your ego. You are allowing your self-doubt to win even when you have the imagination to create something amazing and beneficial for the world in which you live. You will never become a millionaire if you tell yourself that you can't. You have to believe it, and you have to live that way as you take those innovative and imaginative ideas and do everything you can to bring them into reality. In our global economy, resources are always available in one form or another. Whether you need someone to create a logo for your new business, or you require a prototype for a product that you have in mind, you can find these things somewhere simply because we are already all connected. This connection that we share as a human race has always been there, but it is thanks to the imagination of groundbreaking thinkers that we are truly able to connect at any moment from any place. You have to start thinking like they have and use your imagination to bring about change in one way or another. Change is where wealth and power reside. It gives us something to look forward to, and it creates new ideas that can then flourish from the previous ones as we continue to improve and better our lives. We will always want something better for ourselves and for the people we care about, and we have all thought, at least once in our lives, of a way to improve our current conditions. If you expect yourself to rise above where you currently are in life, then you have to put in the work and dedicate your mind and body to your dream. Self-made millionaires are not handed their wealth. They go out and fight for it. You are what you think. We've all heard the saying that we are what we think of ourselves, and it has huge psychological power. If we go around thinking that we are incapable of achieving the success that we dream of, then we have a good chance of never finding them. People do not become the best versions of themselves by seeking pity and asking for handouts. They learn to think positively as they push themselves to do something that will benefit their lives every single day. Self-doubt is immensely detrimental to everything that we do and how we see ourselves. It isn't easy to change your way of thought, especially if you've been thinking negatively for a long time. But if you truly want to achieve the success you have your heart set on, then you, and only you, must work at changing your negatives into positives at every opportunity. You are capable of greatness. You have to say that to yourself, and you have to believe it in everything you do. Thinking positively and remaining optimistic about situations will allow you to broaden your imagination even further as you find new solutions to your current problems. If you believe that there is a better future, then you can start to imagine what it will take for you to make that future a possibility. Now that we're on a brighter and more positive track, we can look at what kinds of skills and creative activities are available to you that can help you further your millionaire mindset. Let's head into Chapter 2 as we discuss your creative genius, the biggest asset in bringing your imaginative ideas to the physical world. Chapter 2: Identifying your creative genius. What exactly do we mean by identifying your creative genius? Well, simply put, this is the area in which you are most brilliant in regards to creating something new and helpful, something impactful to the world in which you live. Your creative genius is what you can do or offer other people that will change the way they live for the better. There are many aspects of identifying your creative genius, and we will discuss each one as we go through and home in on what you can bring to the world around you. Creativity comes in many forms, and sometimes it is less obvious and subtle. But that does not mean it isn't there. Everyone has something they can offer as far as creativity goes, and that's something that stems directly from the imagination. This is, again, a truly remarkable asset to our human nature. This is part of the what-if questions we ask ourselves daily. At every turn throughout history, people have asked these questions, and they have used their imaginations to answer them. Innovations come from everywhere, And it is our backgrounds and experiences that help us create new ways of life. Think about the creative genius that was behind the washing machine. This idea saved time and effort, as it allowed people to focus their energy on other important and productive tasks. As we make our lives simpler and more convenient, we are able to create more time to think about even better ideas. Our advancements as humans is endless. Types of creative genius. There are many different types of creative geniuses in the world, but as we focus on the core of each type, we find that there are several universal definitions of the diverse and unique creative genius person. And thanks to the wonderful and innovative people at Adobe, there is a creative genius test that can help you identify what type of creativity you are most drawn to. Below are a few of their creative types and a summary of what each one entails. Again, these are also universal descriptions that you can further research as you work at defining your own creative genius and what you are capable of. 1. The dreamer. This person is an innovator who uses their emotions and intuition to create an empathetic view of how the world should be. They look for hidden meanings throughout life as they work to resolve problems that are directly connected to the people they care about. Dreamers are drawn to music and literature, and they often spend vast amounts of time daydreaming about the things that make their world seem magical. 2. The artist. This person has a clear vision for the way they see and want to see the world. They have a strong love for beauty, since the artist finds and builds connections between their senses and the world in which they live. They have many ideas, and they like to continue to stay in motion, working to bring their visions to life. The artist is bold and fearless as they bring their creations into reality. 3. The adventurer. This person is curious about everything life has to offer. They love to go into the world and experience it hands-on as they learn and grow with high enthusiasm. The adventurer is never satisfied until they can take what they have learned and turn it into new ideas and new actionable plans. 4. The innovator. This person is eager to jump in and put their ideas to use to see what will happen. They enjoy change and easily create new ways of tackling problems. The innovator is not held back by their boundaries. As they seek progress in the wild unknown, they want to change the way things have been done because they can see that it is not working and that the old systems are holding back the potential for greatness. There are a few other types of creative geniuses to be researched and understood, but this is a good starting place when we are talking about learning to develop the mindset of a millionaire. Of these 4 types, you can start to see how their view of the world can bring about change and provide humanity with a better quality of life. And when we think creatively and imaginatively, we open our minds to every possibility. Nothing can hold us back from achieving greatness, including the financial wealth and independence of a millionaire. Creativity unites imagination with wealth. This open thinking of a millionaire is exactly what has given them the wealth that they are known for. It is highly unlikely that you will become a millionaire simply because you continue to go to work and do the same action over and over for years on end. If you do something that gives you a guaranteed result, then you will always get that same result from that same action. You have to take a leap and actively pursue the life you are seeking. Your imagination is the root of your creativity. You look around and you think to yourself that something needs to change. This is the beginning of creativity. Those thoughts turn into actions, and you begin to put your innovative and creative thinking to use. The physical world will then begin to change before your very eyes as you start to see other things that need improvement and can change for the better, all with just a little imagination. Using your creativity, in any form and in any industry, will enable you to open new doors and new opportunities for personal and financial growth. Because once you learn to see the world optimistically and implement your creativity to bring your ideas to fruition, There's no stopping the potential for wealth. Traits of the creative genius. Taking on the role of a true creative genius can be consuming, so it's wise to keep a balance in your life. You don't want to become so overwhelmed with the idea of change and innovation that you lose track of your quality of life. Of course, adopting the traits of a true creative genius is a helpful tactic to guide you toward your creativity. Creative geniuses are known for identifying and creating order from chaotic situations. Not only do they take the lead and make the best of a situation that seems dire, but they also see the patterns and necessity within the chaos. Where there is disorder, there will be an equal amount of order, as per Newton's third law. Creative geniuses understand this and can pick out the meaning and purpose within a situation that seems aimless. Being introspective and enjoying time spent alone are also qualities of being a creative genius. These allow a person to analyze and think critically about who they are and their position in the world. These thoughts will then enable the creative genius to put their imagination to use as they work to resolve things in all aspects of life that are troubling them. Learning to make time for yourself so that you can cultivate your imagination is a priceless trait. Creative geniuses are drawn to learning about multiple topics rather than focusing all their efforts in one specific area. Because these types of people use their imaginations to the fullest, they get great enjoyment out of understanding different forms of information. Learning and seeking explanations are hallmarks of creativity because they allow a person to analyze what has been and whether or not that is working. Even though creativity often sparks innovation, and that will likely provide a straight path to secure wealth, creative geniuses are not only motivated by their personal gains. They truly see the world for what it could be and not just for what it is. They want to help others achieve success, and they are willing to take great risks to see their potential solutions put in place. All millionaires are creative geniuses. Millionaires are great thinkers because they are focused on the future and what it will take to get society there. They are less inclined to sit and dwell on what is happening in the present, spending most of their creative time planning on a better tomorrow. Millionaires understand that ideas are more valuable to the world than the objects they create. It is this imaginative and creative thinking that sparks those ideas and sets the groundwork for a better future. To think like a millionaire is to think about how we can take what is not working well and change it into something that benefits us all. This can be on a small scale or a grand scale, both of which are capable of giving you a life of wealth and freedom. Creativity, as we discussed, comes in many forms and can be applied to various industries. Every aspect of our lives, from the basic toothbrush that you use in the morning to the smartwatch that you wear, have come from the innovative ideas that change the world. The people behind these ideas saw that something was needed, and they set out to make it happen, often benefiting them greatly in the process. In truth, having the mindset of a millionaire is less about the money that you may receive and more about the willingness to open your eyes to possibilities. Cultivating your creativity. When we discuss cultivating your creativity, we aim to do the actionable steps necessary to bring your imaginative ideas to life. Not only will you benefit from taking the first steps to implementing change, but you will also learn to open your mind to new possibilities that you haven't yet considered. The millionaire mindset is full of possibilities, and a person who has achieved such wealth isn't afraid of taking risks, nor are they closed-minded to new ways of thought. 1. Do your research. People with millionaire mindsets do not shy away from learning and understanding something to its fullest. They do whatever they can to digest every ounce of information before creating a plan and moving forward. Achieving wealth and success doesn't come without a plan, so diving in headfirst will not benefit you if your goal is to become a millionaire. Begin with understanding the whole concept of your imaginative ideas and what impact they will have on the world around you. 2. Test the waters. Taking what you have learned along with your creative ideas and applying them will help you test and see if you are on the right path for innovation or not. Again, you cannot simply take an idea and jump in with everything you have without knowing whether or not it has a positive impact on the people and places involved. You have to take a moment to test out what you are working on to know that it is beneficial and potentially prosperous. This is also the stage where you can flex your creativity and gain valuable feedback on the vision you have for the future. 3. Leave it alone. This step in the process can be difficult for some people, especially if they are the types of creatives who enjoy being consumed by their ideas. Some people have a hard time stepping away, even if it is to their benefit, but this is a valuable step that gives you time to reflect on how far you have come. Taking even a few hours away from your project and ideas so that you can clear your mind and think of other things will allow you to come back with fresh eyes so you can process whether or not to proceed or revise. 4. Polish and finalize. Finally, we end our creative journey by correcting what must be modified and polishing off our ideas so we know they will remain positive and have a beneficial impact on people's lives. This is where we take our ideas out to the world and put them into play, and it is the first step in truly becoming a millionaire. Because now that you have done the hard work and brought a fresh idea into the world, you can share it with those who are willing to pay you for your innovative and impactful thoughts. As we move into Chapter 3, we will discuss how to gain motivation and implement your imaginative ideas into the real world. Motivation is key to keeping yourself optimistic as you continue to look for new opportunities and new routes of wealth. Having the imagination and creativity to drive innovation and make a lasting impact on our world is the abstract and mental aspect of becoming a millionaire. Learning to bridge this abstract concept with the physicalness of true wealth will require the motivation that only you can create. Chapter 3. Motivate yourself today and never fail again. Motivation is a strong weapon when it comes to creating change. Motivating yourself to become a millionaire is a heavy task, but it is one that you can achieve with the right knowledge and understanding. Whether you get there quickly or it takes you a little bit of time, you can definitely reach this potential. And what will you do afterward? What will continue to be your motivation as you see that your goal of wealth and success has come to fruition? This is the real question every millionaire faces at one point in their lives and, usually, before they earn a single dollar. Motivating yourself to become the best that you can be as you work toward improving your life is not an easy task, but it is exactly how you will earn your wealth. There are several reasons you should feel motivated to get up in the morning and go out and tackle your day. These types of motivations are what many self-made millionaires and billionaires have tackled head-on throughout their lives. Their wealth has been a direct product of the success they have chased. Solving problems. We all know the world has many problems that need to be addressed. Some of these problems are big, and some are small, and I'm sure you can think of a few in your local area that you've had ideas on how to rectify. Solving these problems we all face is a big motivating factor for self-made millionaires. As we discussed before, they often create something new or revise something that is no longer working as a source of their future wealth. This initial product or service that they want to improve upon or create is done because they see a problem to be fixed. In the beginning, they aren't focused on the dollars that will come out of it. They are dedicated to the change it will create. You do not need to tackle the world's weightiest problems to find wealth and success of your own. As a motivating factor, solving problems that you are passionate about will allow you to see the world for what it could be and find the desire to chase after your dreams. Remember that millionaires are often the ones who can spot a problem and identify a solution, and they are willing to do whatever it takes to see their solution brought to life. Competition and high expectations. Whether we're keen to admit it or not, we all like a little competition. Sometimes it is this competition that drives us and gives us the motivation to go out and seek something better for ourselves. Some people may call it jealousy or envy, but if you put it to good use and do not hold resentment for the people who inspire you, then you can truly make the most out of these types of situations. Instead of wishing that you were the successful man that you see at the coffee shop every morning, use his image as a motivation for yourself to do better and achieve more. Don't grow angry with him for what he has and what you do not. Reflect on what you have and how it can help you advance to achieve the things you want to do. In addition, maintaining high expectations for yourself in the life you want is key in motivating you to always do something better than you have before. These expectations allow you to focus more on what you are doing and how you can improve yourself rather than becoming jealous of someone else and what they have. Keeping your focus on yourself allows you to review your skills and where you can learn new information to reach the success you are after. High expectations also help you in your current career, pushing you to excel beyond your coworkers and meet deadlines as you complete tasks set out by your superiors. Good performance in your career is reflected throughout your life, as it can provide you with new opportunities and promotions, thus allowing you to invest more capital into your side ventures as you seek to become a millionaire. Survive and thrive. We all have the urge to do whatever it takes to survive in our world. Even when we feel like things are not going our way, it is our nature to fight and rise as we pull ourselves out of situations we do not like. Survival is a huge motivator, as many self-made millionaires have come from poor beginnings. Their desire to make better lives for themselves and the people they care about gave them every reason to act and achieve. It isn't only about surviving, though. A lot of people find motivation in knowing that they can move past simply needing the basic securities a good life can afford. Things like a nice home and access to food and healthcare are necessities that help us to survive. But in order to thrive, to truly take charge of your life and be in control is to prosper as we obtain that freedom we also eagerly want. Being able to secure the self-control in one's own life is more meaningful than wealth alone. It provides us with immeasurable security, and it allows us to fulfill our dreams and find happiness. Some self-made millionaires have gotten to where they are because of their needs and desires for survival. The world they knew growing up was not enough to keep them safe or happy, and they made it their goal to find a better situation for themselves and those they love. This is especially true for people when starting a family, as they want to ensure that they have created a better life for their children than the one they came from. Even people who start with modest and humble beginnings may find a lack of certain necessities, and it is this truth that pushes them toward success. A lasting effect. Not only will your dedication to these issues become your basis for motivation, but they will continue to inspire you as you move forward in your wealth and success. Once you get the ball rolling and you remain determined and focused on something that you care deeply about, then the possibilities are endless. You will continue to grow your wealth and provide a lasting and positive impact on the people around you, which can give you more success on a deeper, more personal level. All of this is possible simply by learning to motivate yourself in everything you do. Understanding that everything in your life has meaning and that every action you take must have a purpose will give you new insights into the world in which you live. If you plan to find success and achieve a millionaire mindset, then nothing you do can be taken for granted. Motivational truths. Sometimes in life, we find ourselves going backward as we move away from our goal. At times, this is unavoidable, and during those times, you must not be hard on yourself. You must understand that some things are out of your control and that it is okay to have a setback. The difference between a person who has failed versus a person who has hit a bump in the road is that the latter knows to get back up and continue on the journey regardless of the effort. Albert Einstein once said, "You never fail until you stop trying." You have to find your motivation and push forward so you can achieve those dreams that will make you a productive and prosperous millionaire. As you go about your day, seeking the success and wealth you desire, there are a few things that may push you and drive your motivation. These things are easy to spot and understand, making them helpful tools in your quest to become a millionaire. Utilizing these motivators will not only teach you how to better grasp your goals, but they will help you identify the goals of others. Helping the people we care about as well as strangers in need grants us that immeasurable amount of success that builds our self-confidence and gives us greater satisfaction in our everyday lives. 1. Achievements. Motivate yourself to achieve something every day. This can be something simple and small, such as getting enough steps so you feel healthier and stronger than the day before. Likewise, your achievements could be more complex. They could build upon each other as you seek a goal that will take you months to achieve. Pushing yourself to bigger and better heights will not only allow you to accomplish more, but it will also teach you patience and perseverance. 2. Security. Maximize your security every week and review how you feel about the security in your life regularly. Where we lack security, we lack confidence. Pushing ourselves to become more secure in what we do and the things we have forces us to see new avenues to our safety. Security can involve your finances and home, but it can also involve your mental sense of security. Again, pushing you to become better with each passing day will help you achieve the wealth you desire. 3. Adventure. Seek out new experiences whenever possible. The great Eleanor Roosevelt once said, "Do one thing that scares you every day." This is a huge motivator, especially for achieving the mindset of a millionaire, in that it pushes us to step out of our comfort zones and experience everything life has to offer. If we always do the same thing as the day before, never seeking excitement or fulfillment, then we will never achieve our dreams. 4. Purpose. Find the purpose in everything you do. In all of our actions throughout the day, there is purpose. Sometimes it is hard to recognize, and sometimes it takes a deeper understanding of what it is you are doing and working toward in order to see its true meaning. Grasping the true purpose behind your actions will motivate you to either become better at what you do so you are more efficient and effective, or it will persuade you to create change. In this chapter, we have reviewed the various ways that you can motivate yourself so you will no longer feel as though you're treading backward from your dreams. We've talked about the different motivations that make people want to go out and seize the day as they better themselves with every action. Now, as we head into Chapter 4, we will discuss the financial practices of wealthy people that you can implement today. These practices will show you how to be smarter with your money as you look toward investing and maximizing your income. Help yourself by helping others. Do you remember how you felt when you first picked up this book? Do you remember feeling like you weren't getting to where you needed to be and that your life was lacking achievement? Now look at all the people around you and just imagine how many of them could be feeling the same way. These people, just like millions of others in the world, need the right motivation and skills to achieve their goals and acquire a millionaire mindset. And you can be the catalyst who helps them find success. As you are learning to effectively build a millionaire mindset, you are discovering how to become more optimistic and true to yourself. These, along with other traits, have given you an opportunity to improve your mental health right along with your successes. You no longer doubt yourself and what you wish to achieve. You now go out and make it happen. One amazing way to help yourself gain additional happiness and contentment is by helping others. The purpose of life is not to be happy. It is to be useful, to be honorable, to be compassionate, to have it make some difference that you have lived and lived well. Ralph Waldo Emerson. This goes beyond simple networking and building a strong relationship with your colleagues. This is about being completely selfless. The gratification that you get from selflessly helping someone else is instantaneous. Helping others find their successes while learning to build a millionaire mindset as you now do is as easy as taking 5 short minutes to leave an honest review of this book. If this book has taught you something valuable, or if in any way you have learned something new that has helped you, leave an honest review for others who may be struggling. They will not know where to find such valuable information without the help of people who have experienced it. With your words, hundreds of other people can learn to balance their personal life and career as they adapt the techniques and skills outlined in this book. My main goal is to help others find success in their lives, just like you are now founding success in yours. You, too, can find the same reward in your own life if you take a few minutes to let someone else know just how much this book can help them. With just a few words, you can help so many others rise above their pain and troubles and take back control of their destiny. Look again at the people around you and those you care about and see often. Wouldn't it be amazing to be the one who introduced them to their new and beneficial life? Imagine how wonderful your interactions will be if everyone is less stressed and full of gratification for the successes they have earned. Chapter 4: Financial Practices of Wealthy People. Having financial independence and becoming a millionaire both involve thinking and behaving in ways that will help you gain your success most efficiently. It isn't enough to believe in yourself and become highly motivated. You also have to put in the time and effort to see through your ideas and bring them into reality. Remember that then, and only then, you will begin to see the rewards for your innovative ideas and the change you are trying to create. Your priceless ideas are an important part of the millionaire mindset. They won't, however, create the vast amount of wealth that you are after. This wealth will give you security and confidence in every aspect of your life, and you can begin creating it today. With these simple practices, you will notice your areas for improvement as well as how you can save large amounts of money with simple, smarter choices. Pay outright. Keep long term. People with plenty of wealth rarely take on loans for things that they can pay for outright. Of course, there are limitations to this, especially for people who are just starting out and their wealth is small. If, however, you have the opportunity to pay for something without acquiring a loan or another line of credit, then you will save yourself plenty of money. To begin with, the fees associated with maintaining a line of credit take money directly out of your pocket and feed it into large corporations for no reason at all. There are, of course, so many diverse options for people looking for credit, some of which have little to no fees. These lines of credit, however, are often reserved for people with high credit scores who have already amassed a good amount of wealth. At this point, there would be no need to engage your money with a company when you can purchase items on your own. Aside from the fees that you get from lines of credit, there are also interest fees associated with the amount you owe. By the time you're finished paying off the item, there is a good chance you will have paid anywhere from 25 to 30% more for the items just because of interest fees. These amounts can differ depending on the creditor, and your credit scores and current income play a big part in this as well. As I said, certain purchases, such as a house, may require a loan. This is unfortunately a truth in our current economy, but if you're ever able to save the money for an item, you should do everything you can to make that your plan. Instead of making payments to a bank for a car, for example, put the money that you would use for that potential payment into a savings account. After a couple of years, you will likely have what you need in order to purchase the car outright. In addition to paying for your items in full, you should also plan to use them for the entirety of their useful lives. Wealthy people do not remain wealthy by spending their money just because they want something new. They are frugal to a certain degree, and they make their purchases last as long as they can. If you decide to purchase a new kitchen appliance and it takes you a month to save the money for it, then you will value it more. simply because you know what it took to acquire it. Once you have the item, you will be more likely to take better care of it as you try and keep it working for as long as possible. Paying for your things outright and using them for as long as you can will teach you to have more value in the items you want and need. This value can be placed on anything, including the diligence and hard work it took for you to save the money in the first place. Don't compete with others. Competing with others might seem like a good idea when you're trying to better yourself, but in truth, it will only cause you hardship in the long run. When you compare yourself with other people, you are thinking that you have to be like them to become wealthier and more successful. Instead of focusing on what other people are doing, focus on your actions and how you can make the most out of what you are doing. You must remember that you cannot control what other people do. You can only control how you react. When we feel that we have to measure up to other people, we begin to change our behaviors and our attitudes in a way that may not even reflect our original goal. You may find yourself trying to purchase a car that is beyond your means simply because someone you admire drives that same car. This can also apply to clothing and electronics, as you purchase things relentlessly just to create an image that would be similar to the people you want to be like. Being competitive with other people, even if you admire them, also brings out negative emotions and feelings, and it can stifle your creativity and motivation. You might become envious of people simply because of what they have. This will take your focus completely off of your initial dreams as you begin to desire more and more material items to outdo those people you wish you could emulate. No matter how you view it, trying to outdo someone simply because you are competing with them will cause you financial hardship before long. No two people are the same when it comes to finances, and this means that where someone might have the wealth to buy a fancy, expensive car, you may find yourself racking up loans quite quickly. Create multiple income streams. People with vast amounts of wealth, especially self-made millionaires, almost always have multiple streams of income. These different sources of income might be from separate businesses, investments, real estate, or side hustles that have done well. Having multiple income streams also allows a person to have something to depend upon if one stream falls short. No matter how you choose to diversify your income, the multiple sources of income must be stable and lucrative enough to deserve your time. You could have a hobby or a passion that is well suited for side hustles, increasing your monthly capital and allowing you to pursue bigger investments as you grow your wealth. You may also face an opportunity where you can invest in real estate or properties that help you build your wealth at a steady pace. You can create additional sources of income with very few financial investments. We will discuss these ideas further later on in the book as we take a closer look at investing for your future. But don't think that you are limited by your current wealth. With the global marketplace and our ability to connect with others instantaneously, creating additional sources of income is easier than ever. Regardless of how you wish to invest, you should understand that becoming a millionaire is not going to happen overnight. It will take diligence and patience, and most importantly, it will take perseverance. At every turn, you will have to analyze your finances and understand where it is that you need to improve upon your spending. This task will be easier since you have already learned how to open your mind to new ideas and see the world for how it could be rather than how it is. You don't want to hold yourself back simply because you feel as though you're unable to save money, especially for something like an investment. There are always growth opportunities, and everyone has the potential to develop the mindset of a millionaire and maximize their wealth and success. Take advice and take advantage. People who have accomplished a lot and have found fortune are not afraid to ask for advice. They can spot when someone has done well for themselves, and they want to discover and understand exactly what it was that helped that person become who they are today. They don't become envious, and they don't try to compete with the people they admire. Instead, they want to learn. Successful people know one important truth: success is earned. The success that you're after both financially and in all aspects of your life, is attainable simply by taking the time to learn from other people's mistakes and triumphs. If you spend your time listening to people who only wish they did more for themselves, people who may make excuses for why they are not where they wish they were, then you will not find quality advice to help you achieve what you are after. On the other hand, if you take advice from someone who has put in the work and the dedication to achieve their great successes and financial independence, then you will get sound, quality advice for your journey. In addition to accepting and even seeking out the advice of other successful people, millionaires are not afraid to take advantage of what is accessible to them. They have amassed great wealth simply by utilizing the programs and offerings that society has for them. This can include everything from employee healthcare to tax deductions and expense write-offs. Knowing where you can save every dollar and maximize every return is going to help you grow your wealth steadily and quickly with little to no effort. In this chapter, we've talked about the various ways you can maximize your money starting today. These tactics are ones that wealthy people use regularly. In addition to saving money and making a real impact on your finances, learning how to create time for all your tasks as well as yourself will help you in your journey to becoming a millionaire. As we head into Chapter 5, we will discuss how to better manage your time so you can make the most out of everything you do. In the world of success, time is money, and by creating a solid schedule, you will be saving money quicker than you thought possible. Chapter 5. Create time for yourself and your dreams. Millionaires, especially ones who have worked hard to make their wealth, will tell you that you cannot achieve greatness unless you make time for it. Creating time for everything important in your life is a necessary step on the path to becoming a millionaire. If you do not make it a priority to maximize your time and increase your efficiency, then you are simply wasting time. And as we already know, time is money. Learning to manage your time properly is all about understanding time blocks and knowing what is most urgent and important. Let's discuss the key points in learning how to manage your time more effectively, and we will review how to identify what tasks need precedence over others. Creating time for your work and those multiple streams of income that we already discussed is vital in achieving financial independence. It is also necessary, however, to make sure you have time for yourself and your hobbies so your quality of life remains high and gives you the desire to chase after those dreams. Achieve more with a plan. Having a plan will help you stay on task and meet your deadlines so you never fall behind. In addition, you can make sure that you plan time for yourself so that you retain a high quality of life as you work toward your ultimate goal. Becoming a millionaire takes a lot of dedication, and you will need to set aside plenty of time to follow through on your investments and financial practices. Focusing on your rewards will help you remain centered on your overall plan, but if you never create time for yourself, you will start to feel burned out. You can achieve more with a clear plan, managing your time so you become more efficient in the things that will help you achieve financial independence. Before you lay out the basics of your schedule, you must identify certain aspects of your work and hobbies, ones that require more attention than others. These things will need to be placed at the top of your list and given priority, and accomplishing them will help you feel successful every step of the way. Identify what is important. First, identify what is most important in your life, both personally and professionally. As we design our daily schedules, we must keep in mind what needs our immediate attention. These are unavoidable things that could cause you problems if you do not complete them. Making time in your schedule for these important tasks will give you a sense of accomplishment even on the days when you feel like very little has been done. Important things are those that we cannot forget or simply decide not to do. Creating time for personal hygiene and exercise, as well as paying your bills on time and keeping appointments, are all things we must do. Some of these important tasks can be delayed for a little bit, and some may even be rescheduled, but they are unavoidable. Before creating your schedule, as you develop a plan to manage your time, You must make a list of the things that are most important and must always be addressed. Again, this can involve things in both your career and your family life because there are important things that we must take responsibility for in all aspects of our lives. Identify the urgent. From the most important things on your list, you can now discern which are most urgent. These things need to come before everything else, even the things that you deem important. When picking out the most urgent tasks from your list of important responsibilities, keep in mind that these things are the ones that you personally have to address. They are not the types of things that you can ask someone else to help you with, such as making appointments. The urgent and most important items you are responsible for will always come first in your daily scheduling. This will ensure that you never fall behind on deadlines, as long as it is within your power, and that you will finish each day with a sense of pride knowing that you've accomplished something important. Urgent matters are sometimes out of your control, such as a work meeting. You will have had time to plan for the meeting in advance, but once it arrives, you will be asked to attend something at a specific time and place. This would, of course, have high urgency on your schedule. Other times, urgent matters can arise out of nowhere, such as a flat tire. Obviously, we cannot plan for something like this, but allowing yourself some wiggle room in your schedule will save you on deadlines and reduce your stress. Identify the rest. Looking at the rest of your tasks, you may start to see how your schedule fits together with your life. Making time for the unavoidable, as we discussed, will help you prevent setbacks to the best of your ability. In addition, you must also make time for yourself and the things that give you pleasure. If your schedule is full of work-related items or things that will help you on your quest to obtain financial independence, then it is not balanced enough to make you feel fulfilled. Having a sense of accomplishment in what you do is more than the rewards and the dollars that you get in return. It is also about the satisfaction you get from the life you live. This is exactly what the Millionaire Mindset is about. Millionaires do not spend every waking hour focused on where their next dollar will come from. They create time for work and time for play. This balance is essential in terms of success because we all measure success in multiple ways, not just by the money and material possessions we own. Success is also about the relationships we have and the types of characters we become. It is important that no matter where you are in your life as far as career and finances go, you make time to take care of yourself and allow yourself to be creative. Creativity sparks change and innovation, two things that millionaires are well versed in. When you lack creativity and inspiration, you do not allow yourself to grow into your full potential. Making time so that you can embrace your hobbies and passions will allow you to grow as a person both professionally and personally. Likewise, you should always make time for yourself and not just the necessities like hygiene. It is important to focus on your mental health as well as your physical health, and you should create time so you can foster healthy practices that will help you face all your day has to offer. Know your limitations. Balance, as we discussed, is essential in finding success. No matter how good you are at what you do, you will always have limitations. Learning what you are capable of and what you know you cannot handle is a vital step in taking on the mindset of the millionaire. Millionaires are not afraid to ask for help when they know that there is a task they cannot complete on their own. Not only does it save them the stress and the heartache of having to deal with a possible failure because of their lack of skill or knowledge, but it also saves them time. As we know, time is very precious, and wasted time takes away from the things we truly desire. Understanding your weaknesses does not make you weak. It makes you aware. When you are aware of what you can do, the sky is your limit. When you are faced with something that you know you cannot do, you must learn to ask for help so the task gets done on time. Prolonging it simply because you feel that you are not smart enough or strong enough to make it happen can become detrimental to your overall plan. Not only will you end up wasting time on projects that could easily be done with a little help from someone else, but you may also suffer the loss of relationships and a break of passion in the project itself. it is important to make a list of the skills you know you are good at. You can utilize these talents as you push yourself toward becoming a millionaire. On the other hand, making a list of skills that you feel you cannot do well will help you identify tasks that are better suited to someone else. Skills to keep in mind on this journey may involve communication, marketing, research, and organization, to name a few. If you feel that any of these, or other skills that could help you in creating financial independence, are ones that you know you need help with, then asking someone will save you time and stress. For example, if you plan to invest in several properties, but you know that your organizational skills are not as keen as they could be, you might consider hiring an assistant or an accountant to handle your papers. These people could also help during tax season as well as when purchasing or leasing new properties. The time that you save from handling excessive paperwork will allow you to focus your efforts on new ventures as you continue to grow your wealth. Efficient, effective, exemplary. In everything you do throughout the day, you will design time blocks that allow you to focus your efforts on one task at a time. Staying on top of this particular task will help you finish projects quicker as you minimize the time you've spent working overall. Following your schedule will enable you to become efficient, allowing you more free time to pursue additional interest. Once you have a schedule that works well for you, you can apply your time management skills to all aspects of your life and benefit from efficiency as you feel more accomplished in what you have done. Learning to complete your task in a given amount of time will also force you to become more effective. Your performance at work and in your pursued interest will continue to rise as you face new growth opportunities. Proving yourself in your career can also grant you self-confidence, which will inspire you to go out and pursue bigger and better projects that could lead to more guaranteed wealth. Staying on top of your schedule and committing to seeing each task through is key to doing everything with purpose. Having a purpose in your actions and your interest will force you to become more invested in the process and the outcome. This is where passion thrives as you build a deeper connection to the things you are working on, things that might just change the world. To become exemplary in your life, both personally and professionally, you must master efficiency and the art of being effective in a limited amount of time. Making every action count leads you to focus more on how you spend each minute and each hour, and it prevents you from wasting time on things that do not benefit you. Scheduling for results. Now we can put everything together and create a schedule that will truly enable you to focus on your goal of becoming a millionaire as you balance your life through work and hobbies. Remember to know your limitations and be mindful of what you can and cannot accomplish on your own. 1. Create time blocks for the most important and urgent matters that you must handle yourself. Give yourself a little extra time for these items since you do not want to miss deadlines or push yourself too hard. 2. Schedule time for healthy habits that will make you feel good physically and mentally. This won't be a big part of your day, but it is incredibly important that you make it a priority. These items may include hygiene, but they should also include exercise, mindful practices, and quality rest. 3. Add time for hobbies and passions that drive your creativity. You do not need to get something out of these hobbies as far as monetary value goes. These are meant to enhance your quality of life and bring you happiness. 4. Every week, schedule time to improve upon your skills and work toward learning things that can help you in your pursuits. If hiring someone to help you in marketing is costing you money that you know you can save by doing the job yourself, then schedule a time to increase these skills. Again, do not push yourself too hard so you begin to feel stressed over a situation that should otherwise bring you joy. In this chapter, we've discussed how to create time for yourself and your dreams as you've learned to identify what is most important in your life. You now know that having a plan and a schedule is vital to success because they help you stay focused on your goals, and they also allow you to pursue your passions and remain creative. As we head into Chapter 6, we will discuss the skills that you need to become financially independent. These skills go beyond the ones that you may or may not currently have, and they help you home in on your true character as you become the best version of yourself. Chapter 6: Skills You Must Cultivate to Become Financially Independent. Unlike the skills that you use daily, ones that can sometimes be delegated, these skills are the ones you can improve upon and even master. The skills explained here will not only help you secure more investments or build your wealth, they will also help you in your relationships. These skills are the kind of skills that a good character is built upon, and they will help you become the best version of yourself. Self-control. Self-control is an essential skill when it comes to learning how to manage your money like a millionaire. Understanding how you can better control your urges to impulse spend will allow you the ability to save money with every shopping trip. Self-control also teaches patience, which helps you recognize the larger future rewards that you will reap if you are smart with your money now. Some people are great at self-control when it comes to their finances, and other people need to practice as they learn to avoid unnecessary purchases. It can be difficult in a consumer-driven global marketplace, where there are advertisements and enticing pictures and descriptions everywhere you look. It will take diligence and dedication to home in on your self-control skills. But if you keep your eyes on the rewards that will come, then you won't be as tempted by the small amount of satisfaction you get in the moment. Self-control is all about planning ahead for the future that we want. On your journey to becoming a millionaire, it is crucial that you keep your goal of obtaining financial freedom out front during everything you do. If you allow yourself to focus on short-term goals too often, then you will wind up spending through your savings and having no capital to invest and grow your wealth. As we already discussed, becoming a millionaire can happen quickly, or it can take many years. The difference between the two is that self-control and patience allow you to save more and grow your wealth at a rapid pace. Determination. Determination is a huge factor in success. It is the driving force behind all that you do. Determination doesn't stop there, however, as it is the product of your inspiration. Being determined means that you take your optimism toward a situation and continue to look at the positives as you push forward, never wanting to quit on your dream. Determination is also about seeking opportunities when others don't. People who lack determination are unable to succeed in their dreams because they are stifled by the idea of failure. These people may not understand the mindset of a millionaire because they are not determined enough to chase after the goals they set forth, especially the big ones that take a lot of patience and perseverance. Once you open your mind to new opportunities and innovative solutions to existing problems, you can let your passion and creativity take hold as you seek a better understanding of the world in which we live. Being determined means that you will not quit or lose focus on your ultimate goal. Wealthy people, especially self-made millionaires, are very determined in all that they do. When focused on acquiring a vast amount of wealth and success, you cannot afford to be lazy in your pursuits. Remember that time is money, and if you choose to remain focused and determined to achieve your goals, then you will save yourself plenty of time as you continue to build your wealth. Resilience. On the path to success, you will face certain setbacks, as these are unavoidable sacrifices in your pursuit of achieving greatness. No one is perfect at what they do the first time around, and it will take patience and practice to accomplish the life you dream of. Millionaires are not just determined and optimistic. They also have thick skin and do not let the negative elements of their surroundings impact them. People can still get frustrated or upset because they are not yet successful, but millionaires certainly don't let obstacles hold them back. Resilience is about having thick skin, and in the world of wealth, this is especially necessary. You must learn to let the critics speak their minds, and you can choose to accept their advice and criticism, but you cannot take it to heart. As you seek this new life, especially with the mindset of a millionaire, as you add innovation and creativity into your world, there will be people who doubt your actions. Your resilience will keep you focused on and determined about what is most important. Millionaires are not afraid to fail because they know failure teaches them valuable lessons that they can later apply to their pursuits. It is important to our human nature to make mistakes, but it is crucial that you learn from your mistakes and continue to grow in order to succeed. Without learning something new, then your failing moment is nothing but a failure. When you apply new knowledge and adopt a new perspective on your situation, then this brief moment of failing becomes a lesson. Optimism. Being optimistic means looking on the bright side of things and keeping your positivity as high as you can. Wealthy people are often optimistic, and they don't let setbacks stop them. They aren't afraid to think outside the box as they look at new solutions, which is all part of identifying the change that is necessary in the world. Optimism is a skill that requires you to question the hand you were dealt and analyze it from every perspective until you find a solution. With optimism, there is no giving up. People who have found great success and financial independence are not content with accepting defeat. They are at the top, and they are the best of the best simply because they refuse to quit. They know that becoming successful requires sacrifice, and that to be optimistic is to continue working even when it seems like all the doors are closed. Having a millionaire mindset means that you must become optimistic in everything you do. This applies to your personal and professional life, pushing you to never give up, even when victory is far from reach. Optimism has lasting effects on mental health, as it keeps us from viewing everything in a negative light. Negativity can stress and strain your mind, and it can prevent you from being creative and pursuing the passions that have inspired you to seek change. Instead of complaining about something or telling yourself that you cannot accomplish something, you must focus on what you can do. There is no room for negativity in your financially independent future. No matter what comes your way, you must remain optimistic. This chapter talks about the character of a wealthy and successful person. These traits and skills enable you to stay focused on your goals as you grow into the best version of yourself. Moving on to Chapter 7, we will take an in-depth look at how to invest for long-lasting wealth and prosperity. We will go over some core investing principles as you discover new ways to create streams of income and what it will take for those investments to thrive. Chapter 7. Investing for long-lasting wealth. Developing a mindset that enables people to accumulate vast amounts of wealth and success is all about focusing on the future. If we spend too much time thinking about the here and now, and the immediate rewards that we get out of our current actions, then we easily fall into the trap of forgetting about planning for our futures. Patience teaches us that we must take our time and be diligent as we work toward big goals. The more focused you are on your future and obtaining the wealth you have your sights set on, the earlier you can reach that goal and enjoy a prosperous and successful life for years to come. Investing will not only allow you to focus on a better and brighter future, but the earlier you start, the more wealth you can accumulate. Advisors and investors understand that putting back a specific portion of your income for the sole purpose of growing your future wealth is a priceless choice to make. Investing anywhere from 10% to 20% of your paycheck can begin to grow into something substantial in as little as a couple of years. This tactic, as well as others, will allow you to stay focused on your goal of becoming a millionaire as you continue to focus your efforts on other ventures. Investing for your future creates peace of mind, especially as you age and take on more responsibilities. You may find yourself planning for your children's college or weddings at some point, and having solid investments will help you take care of these expenses without incurring debt. As we discussed, debt is detrimental to becoming financially independent. Let's go over some of the core principles of investing so that you can make an informed decision that will best suit your lifestyle. Balanced portfolio. In the world of investments, your portfolio is the collective, various investments that you have chosen to finance. Having a balanced portfolio will allow you to continue your financial growth as well as maintaining a stable income without involving too much risk. The earlier you begin investing, the more risk you can take on because you'll have more time to recoup if there is a setback. When investing later in life, it is wise to make safer decisions about your investments, choosing stocks that grow slowly and steadily. At any point in your life, maintaining a decently balanced portfolio will allow you to take on some risk while preventing an enormous loss of wealth. Balanced portfolios will often contain stocks and bonds in a strategic mix to benefit your lifestyle and your spending habits. Stocks are often the item that incur the most gross. Therefore, you can be a little riskier with stocks as long as you have bonds to balance out your investment portfolio. A bond, on the other hand, is used by various different types of companies as well as businesses owned and directed by governments in order to raise money for that company. Bonds are a safer investment option because the person or company who has issued the bond has agreed to pay back the initial investments made by the bond purchaser plus any interest agreed upon. This typically happens over a set amount of time, which means that bonds are often held for years. Because bonds are not a quick turnaround type of investment, you can invest in these to prepare for your future. Again, having a balanced portfolio will also help you plan for your future, and filling the rest of your investments with stocks will help to round out your portfolio. Some stocks are high risk and high reward, meaning that they have a high chance of doing very well or very badly. If you're starting out young, you can afford to test out these stocks, as they may return a huge reward over time. Investments that have historically involved high risk and high reward are ones such as Microsoft and Bitcoin. While these are great examples of high reward, some stocks plummet and can cause you a great loss. The truth is that you may not know until it is too late, which is why keeping your portfolio balanced is key in continually growing your wealth. Dividend investments. A dividend is a payment received by shareholders who have invested in a company's stocks. Not all companies offer dividends, and it takes a good amount of investment capital in order to see a quality return on dividends. These are, however, a great way to add additional income to your lifestyle now as opposed to in the future. Because dividends are paid out based on a company's profits, you can likely see this supplemental income on a quarterly basis. When choosing dividends, it is wise to purchase stocks from a company that is steadily growing and does not have a lot of risk. Some companies you can purchase stocks in that fit this category include the pharmaceutical and transportation industries. Other industries and stocks that pay high dividends include Hasbro Inc., Merck & Co. Inc., and 3M. Mutual funds. A mutual fund is a collection of various stocks and investments. Mutual funds have become very popular in recent years, as people with little money can invest in a collective group of companies and begin their journey into stocks. Mutual funds typically comprise small amounts of each stock, such as a percentage of a stock rather than an entire share. This can lower the price of ownership of a stock within a company, which can help people who are unable to purchase a full share. Mutual funds are perfect for investing in high-risk, high-reward categories, such as the technology industry, which can often grow rapidly. By the time someone shows interest and wishes to invest, the stocks for that company may have exploded and are too expensive for some to invest in. Owning a small amount of stock in a company such as Apple can do wonders for your portfolio, and with a mutual fund, you can get started on that investment with very little capital. Some companies are very good at diversifying mutual funds so they remain balanced within themselves and continue to grow at a steady pace. Real estate investments. Investing in real estate is just as it sounds. You are purchasing property in order to turn a profit. This can involve a variety of sources, such as office buildings, apartment complexes, and developmental land for new suburbs. The possibilities are endless with real estate investments, but it is always wise to begin small to test out whether this method of investing is right for you. Some real estate investments will require more hands-on attention, especially if you decide to run an apartment complex and need to handle repairs and upkeep of the building. You can choose to hire these jobs out, just as much as you can hire someone to handle the finances involved in the building, but each of these come at their own cost as well. If you desire to eventually grow your real estate investments into bigger projects with greater profits, starting small will allow you to reinvest your initial returns as you continue to grow your business. Having the credit and assets available to you in order to secure loans for these investments can lead to additional debt, but by taking your profits and reinvesting them immediately, your wealth will grow to the point where you can pay off your debts quickly and avoid a certain measure of interest cost. Saving for setbacks. Life can be unpredictable at times, and the only way we can handle these moments is to prepare for them ahead of time. Aside from investing in your future by putting back 10 to 20% of your income, it is wise to create a savings account that could see you through anywhere from 3 to 6 months. It can take a little while to accumulate these savings, but once you do, it will give you peace of mind for whatever troubles come your way. It is common for people to face financial hardships. Even the most successful people have had difficult times of their own. Knowing that you can fix your car or take a couple weeks off work for an illness or surgery is incredibly uplifting. The last thing you want to do is mess with your future investments in order to save yourself from a present-day setback, because that could delay your goal of becoming a millionaire. Pro investing tips. 1. Investing consistently will allow you to continue growing your wealth. This also means that for every consecutive year that you invest, your wealth will grow by a higher percentage because of the base amount of funds you have already accumulated. 2. Investing early is key to allowing your finances to flourish in an ever-changing market. Ideally, you should invest at the very first opportunity you have, so long as you have done your research and found the right investing methods for your lifestyle. Once your investments become established and are steadily growing, you will be able to weather any type of setback if you wish to invest in riskier options for higher rewards. 3. Investing in yourself can provide you with self-confidence and greater optimism. Take opportunities to further your education and master new skills that can help your success in every aspect of your life. Taking care of yourself will remove unwanted stress as you focus on the things that are most important to you, driving your passion and creativity. In this chapter, we discuss many different aspects of investing for your future. We talked about mutual funds and stocks and how to save for emergencies so you can have confidence in yourself without pulling from your future investments. As we head into Chapter 8, we will review the pillars of financial success and how to implement those into your lifestyle. We will pull everything we know together as the mindset of the millionaire starts to take hold. Chapter 8. The 3 Pillars of Financial Success. Finding financial success is all about knowing yourself and the world around you on a deeper level. This involves many aspects, but 3 core principles will help you in this pursuit. These principles involve life and our place within the natural world, the human relationships that we build over the years, and the legacy that we will leave behind. Let's review each of these pillars and how they relate to your financial success and the wealth that comes from both the material and abstract world around us. Growing personal relationships. Building a network of capable and intelligent people to help you in your pursuit of wealth will only increase your chances of success. No self-made millionaire has ever accomplished their wealth on their own. It takes plenty of understanding and a wide array of experience to capitalize on every aspect of financial independence, and that is rarely done by one person alone. This harkens back to the skills and traits you must have to become a millionaire. While learning optimism and gaining self-control will help you in your pursuits to become a millionaire, you can delegate certain traits to save yourself time, which we all know directly translates to money. Creating a team of associates that can help you build your wealth, ones especially suited to handle the tasks in which you are not an expert, will give you the ability to focus your efforts on innovations and pursuits. These other pursuits can create additional streams of income or they can allow you to stretch your creative genius as you think of new, prosperous ideas. Disconnecting from technology. Taking a moment to step away from the technology in your life can vastly improve how you process the world around you. We spend countless hours on our devices day after day, and over time, this weighs heavily on our mental and physical health. We find it hard to break away from the constant stream of information that we access at our fingertips, thus making it difficult for us to see our lives and the world in which we live with clarity. To get a better grasp on the problems that we face, we must step away from the distractions and the stimulus that we receive from these devices. Putting down our technology in favor of nature is a fantastic way to broaden our imaginations as we take a deeper look at who we are and what we need. This allows us to have more patience as we develop a deeper understanding of the people that our choices directly impact. In turn, we become better decision makers and can gain self-control and optimism simply because we can reflect on ourselves and know ourselves on a deeper level. Simple exercises, such as walking or taking a bike ride, not only connect us with nature and allow us to learn more about who we are, but also help in our mental and physical health. Getting fresh air and having light, repetitive movement can help us breathe better and reduce our stress levels in a healthy way. This can also provide us with better sleep as we are not as restless as we would be if we sat still all day staring at a screen. Millionaires, especially ones who have acquired their wealth by their own determination, rarely sit around staring at a screen for hours a day. Even the innovative thinkers who brought us this technology, such as Steve Jobs and Bill Gates, do not spend countless hours mindlessly absorbed in the material world. These people are known for their deeper understanding of humanity, something that comes from experience in the natural world. An altruistic view of oneself. Everybody wants to find purpose in their lives and have meaning behind what they do. Being a millionaire grants you a certain level of power, and using this power to benefit other people just as much as yourself is a wise choice with lasting positive impacts. Understanding your role in society and in the greater natural world is a priceless piece of intelligence that many self-made millionaires understand. It is not enough to know yourself. You must know your place. People who have positively impacted the world, on both a small and large scale, have done so because they care deeply for the people of our planet. They know that, by helping others find success and freedom in their lives, they will, in turn, find even greater successes on their own. This truth is universal, and it is every bit as important to the mindset of a millionaire as the dollars and material possessions they accumulate. Change on a grand scale is not necessary for you to become a millionaire, but being a respectable and kind person is. Without compassion for humanity and a general sense of understanding for those who surround you, you can't expect to become a leader. Even if you plan to create wealth by investments, you will still need to interact with others and support your community. You may very well be directly responsible for helping to produce jobs or new opportunities for those within your community, and therefore, you must be a respectable and trustworthy leader. With great power comes great responsibility, an adage that we all know well. Equally true, money and wealth amount to power. The way you use your power is up to you. But by keeping your mind open to new possibilities and innovative ideas that can continue to solve problems close to your heart, your success will have no end. It is by helping each other find greatness that we find our own. Bringing it together. These three pillars of financial success create a strong foundation that achievements and wealth can build upon and flourish from. Knowing your place in the natural world, as well as how to connect with it, can provide you with peace as well as an eye for creative approaches to solving problems. Connecting with people who have made a difference in your life, and also people who can help you change for the better, is the basis of a strong network of talented individuals. This network allows you to rely upon each other and strengthen one another so that weaknesses are not a concern, and you can always focus on reaching your potential. Likewise, Knowing that the power you will accumulate is equal to the responsibilities you must face will guide you into making intelligent and compassionate decisions. Being a millionaire means that you must take into account not only the benefits you wish for yourself, but the impact of your actions on those around you. In this final chapter, we reviewed the 3 pillars of financial success and what they mean for your overall growth as a person and a millionaire. Staying rooted in your pursuits as you focus on solutions to real problems and bring priceless ideas into your world is exactly what having the mindset of a millionaire is all about. In all of this, your true goal is about bettering your life to obtain financial independence. Being a millionaire will also grant you the abstract success of an accomplished life with quality relationships and a lasting impact on your invaluable legacy. Before we bring this to a conclusion, however, let's take a brief look at one way you can instantly create success for yourself today. The secret to creating instant success. Finding success in life is not only about material possessions, but also the relationships you build along the way. It is easy to create instant success when you have this principle in mind. By helping others succeed in their passions, you will not only gain this priceless form of wealth, but you will also become respected and sought after by your peers. This is the true basis of a millionaire mindset. Self-made millionaires do not start their lives as self-centered or entirely focused on their own needs. As we discussed, they look at the world and see how it should be because of how it will impact everyone. They are concerned about real issues regarding the communities they live in. And these wealthy people understand that to continue to grow their wealth and success, they must help others along the way. Today you have an opportunity to gain this instant success by lending your voice to help someone else in search of the millionaire mindset. In less than 5 minutes, you can take the time to leave an honest review of this book so someone else can discover useful information that will help them on their life's journey. Helping others helps us. I aim to reach out and help as many people as I can so they can find success and financial independence. Knowing that other people can rise above a life that gives them little quality and happiness fills me with gratitude. You can have a part of this gratitude as well, simply by taking a few minutes to let other readers know just how helpful this book has been for you. Think about how many people you interact with every day and how many times you have heard someone mention that they wish they had a different job or that they had more financial security. You could be the light to their darkness, showing them a new way and bringing more positivity into your everyday world. Now think about the lasting impact that could have on your relationships and your future opportunities. When we give goodness, we receive goodness in return. And this is why I ask you to spread the word. I thank you in advance, and I wish you the best as you spread your wealth to others and continue to grow your network of encouraging relationships. Conclusion. You have come such a long way on this journey to obtaining the mindset of a millionaire. Along the way, we have discussed many principles that can allow you to embrace a more fulfilled life as you seek true financial independence. Remember that the sky is the limit when it comes to your dreams, and never stop chasing the creativity that has inspired you to seek new solutions in your world. Maintaining your millionaire mindset will take diligence and determination as you go out into the world and use this knowledge to achieve your dreams. Look back on these chapters often when in doubt, and remind yourself that sometimes you have to stand on the outside to see something clearer, and that going with the flow is sometimes less productive. Change and innovation are what drive the world forward. As you put these skills and new information to use, remember to keep a clear plan of your goal and maintain plenty of time for yourself and your hobbies as well as work. Note that motivation is key to achieving the results that you are after, and that it takes your creative genius to spark the innovation that your world desperately needs. The physical wealth and material goods that are associated with being a millionaire are a byproduct of the ideas that you are currently cultivating. These ideas are priceless because they are unique to you and will help you do something no one else has ever done. This, along with diligent financial practices, is exactly what being a millionaire is all about.
We appreciate you tuning in to one of our captivating audiobooks. For more immersive experiences, here is another audiobook we're certain you'll enjoy. Don't forget to show your support by liking this video, sharing what you loved about this audiobook in the comments section below, and subscribing for more captivating audiobooks like this. Thanks for being a part of our audiobook community.